There we go. So, yo, what up for y'all on the YouTube replay? I hope you're having a great Saturday. On Friday, the market went crazy. Let me show you this real quick. I'll give you a quick portfolio update. Then I want to show you some stocks that I think are potentially looking good to maybe buy next week. I'm looking at John Deere and some other names. But check this out. Here was our Friday return. We were up 2.2% on Friday. It was a great day. There's a lot of news with like Google and Apple are doing a partnership. Meta signed a $10 billion cloud agreement deal with Google, which is great news. We also have our Roth IRA right here. Roth IRA is just a retirement account, and we're only up 3.89% all time. We started it basically exactly a year ago, but these are all the stocks that we got in here. One of my newest positions was actually Microsoft. This is kind of like a cash in equivalent. I might just because it's only one share, I might sell out of it eventually if I see a better opportunity to buy somewhere else. But yeah, here's also our Moomoo portfolio. This is our buy and hold account where I just buy individual stocks in here and I hold it on for the long run. So if you come back to my channel in like a year or 2 years or something, I should still own all these exact same stocks. I try and just hold it on for the long run. And then finally, we have our growthy portfolio. So basically, in here, we buy growth stocks, some riskier names, and we're up only 18% all time in here. So we've definitely underperformed the market in the long run. But here are the stocks that I own in here, some popular names like Futu, AMD. I saw AMD. I actually do want to go over AMD, Reddit, SoFi, all these names right here. Sprouts Farmers Market, Progressive Corp, Zoom on Friday. Zoom we're still down 45% on Zoom, but on Friday they had a little nice rally. They had a really good earnings beat. I'm actually shocked the stock isn't up more, but yeah, they just sell a commodity. No real moat on Zoom. But let me go over AMD real quick. And what up, Musica? 8 said hi from Brazil. Yo, that's awesome. What's up, man? Hope you're having a great Saturday. So actually, let me go over John Deere. Then I want to go over AMD stocks. So this one right here, it's kind of a play on commodities. So if the price of commodities go up, farmers and whatnot will be able to spend more on John Deere. Now, the PE ratio of this company is a 25, and the stock, is pretty close to all-time high. So, but there is one thing that I am watching closely, and that's the growth of this company. I think we'll have some easy comps for next year. But look at this. The revenue's down 9% year over year. The profits are down 26%. So that means they're losing their margins, just a 10% margin this quarter. But anyway, I'm looking for John Deere to buy shares. You get a 1.3% yield, only a 23% payout ratio. So that one's looking somewhat interesting to me. But let me pull up AMD right here because AMD stock is one that I do own. They have underperformed Nvidia. But, here's the thing with AMD. You didn't even have to time the bottom. The bottom was $75 or $76. We got in at $125 a share, and we're still doing great. That's how you know it's a great growth company. So we're up 35% on my AMD shares. This is one I'm also just going to hold on for the long run. But check this out right here. Here's what I love about them. Obviously, we know they sell GPUs, and they have this 17% PC GPU market share over there on AMD. And check this out, the client and gaming revenue is up 69% year over year, but also they've been really growthy from the data center business. So AMD, is getting into the data center business because data centers need GPUs, and well, AMD just makes their own GPUs, so it's pretty genius for them to get into that industry. So AMD's doing pretty good. Also, look at these free cash flow numbers. That's what FCF stands for. They made $1.8 billion of free cash flow just this quarter. Great quarter. 872 million in net income, up 229% year over year. And they have this really good balance sheet. I mean, look at this. They have no net debt at all. So from a financial point of view, I'm really loving AMD. The free cash flow is growing. They have a great balance sheet. The net income's growing. What are the actual sales up? What's the lifeblood? Yeah, sales are up 31, but net income's up 229. So they are growing their margins. So anyway, great news for AMD again. It's tough buying this one right here. It is a bit at a high valuation, but that's just one I'm going to hold on for the long run. I'm like, yeah, let's look at this one too. Since we're looking at AMD, we can pull up Taiwan Semi as well, since we're kind of in the somewhat same industry. So Taiwan Semiconductor right here, this is another great one that I actually kind of would consider buying right now because I feel like this one's going back to all-time highs. It's going over $250 a share. Here's why, again, not financial advice here, but look at this PE. This is the net income multiple. So Taiwan Semi is trading at 25 times net income. I feel like this has the ability to like stretch up to like maybe a 30 PE before it really starts to get crazy overvalued. I mean, look at the industry average. It's a 47. So they are trading at a below industry average, but again, they are A lot of the revenue comes from Taiwan, right? Let me actually pull this up right here. So, or actually, no. So look at that. 69% of the revenue comes from the US, 11% comes from China, then Taiwan. So, yeah, but they're HQ'd there. But yeah, they make those like 2 to 5 nanometer wafer chips. And look at the wafer growth right here. It's up 31% year over year. How about this business, the others business? That's up 70% year over year. I'm not sure what happened here, but that is phenomenal growth, up 70% year over year. But look at this right here. Here's the best part about Taiwan Semi. I mean, they made 14 billion in net income this quarter, 11 billion last quarter, 11 billion the quarter before. I mean, this company is literally making 10 billion plus in net income a quarter. It's oopsie. These are some really solid numbers. So anyway, that's what I love about Taiwan Semi. They're just extremely profitable. They're deleveraging their balance sheet as well by 2% year over year while growing their assets. So Taiwan Semi is a cool one. And it's kind of like you get exposure to Nvidia and AMD with a yield. So look at this. You get a 1.3% dividend yield on Taiwan Semiconductor. So I almost wish I bought Taiwan Semi over AMD, but still, they're both great names. And yeah, hey, SoFi Technologies, yeah, man, this one has been performing very well. They deserve to be at this new 52-week high level. So I do own 24 shares of SoFi. So I might be biased, but here's why they deserve to be doing this good. Look at that. They're up 7.3% on the day, or on Friday they were, and they're pretty much at pretty close to an all-time high, since their IPO there. But here's why they deserve this high valuation. Here's why they deserve to be doing so good. This metric right here, SoFi's Fintech, they have their own banking charter. And look at this. Here's their financial services. It grew 105% year over year. That's incredible growth. That's why I think this one deserves a high premium, because they're really high growth. Same with the lending business. The lending business is up 30% year over year to a new record. So both businesses on SoFi are at a new record. And look at this right here. Revenue's up 42, and on that 850 million of revenue, basically 100 million of that was net income. So that's what I love about SoFi Technologies. They're super growthy, they're innovative, they're making net income every quarter. People are really starting to take them serious. Best 5 dividends and ETF. One dividend ETF I really like. You've probably heard of this one before. This is SCHD. If you're wondering what is an ETF, it's basically just a basket of stocks. So if we look at SCHD, here's what actually makes up this exchange traded fund. Chevron, it's like the higher yielding names, like the oil and gas names in the consumer discretionary, kind of like a Pepsi, ConocoPhillips. The healthcare, they got AbbVie. AbbVie's a great name. Merck, another healthcare, Home Depot, Verizon. Yeah, look at Verizon right here. If you're looking for a stock to maximize your dividend income, look at this one right here. Here's Verizon, 6.10% dividend yield, but a 64% payout ratio. So that means they actually can afford the dividend. But here's the thing, with these higher yielding dividend stocks, they usually don't outperform the market in the long run. Like if we zoom out to the monthly chart, if it'll load here, basically Verizon is flat since a long time ago. Actually, let me zoom out and see. So Verizon is the same price that it was back in 1997. So if you bought Verizon in 1997, it's the exact same stock price today. So it's because of the high dividend yield. They pay out literally most, if not all, a lot of their net income just to dividends. So it's tough. Hey, Ranger John, I didn't even see that, brother. Thanks for the rose there. I appreciate that, man. Atomic Joe, what's up, guys? Yeah, I hope you guys are having a good Saturday. Normally I don't stream on Saturday, but I wanted to do that anyway. So yeah, we can look at Meta too. Yo, I'm streaming on YouTube and TikTok right now. So what's up for y'all? I'm reading both chats. What up, German? Good to see you, man. Yeah, happy Saturday. So let's look at Meta right here. This is another company I love, and they're not at all-time highs, but they're not too far off of it. Meta deserves to be at an all-time high, to be honest with you, though. They're so innovative and so growthy. I mean, look, first off, here's why I think Meta can hit a new all-time high. If we look at this multiple, Meta's a Mag 7 company, and they're trading at 27 times net income. I feel like, for Meta, they have the ability to really stretch up to like a 30 PE before it really starts to get overvalued. And look at this right here. Here's a crazy metric. They have 3.48 billion daily active users, which is pretty crazy. Meta, all their apps are in China, so I don't know how they have like 60, 70% of the rest of the world on a Meta app a day, but that's pretty crazy. Not sure if some of it's like AI bots, but who knows? Oh, well, all I know is that the fundamentals are incredible. If you look at the revenue's up 22, but the net income is up 36. Incredible. So that means they're growing their net margins. When the net income is growing faster than the revenue, that's margin expansion. Margins are up 12%. This is a $2 trillion company with 40% net margins. They print money, bro. So anyway, I love Meta. They're introducing ads to WhatsApp. That's a huge tailwind. So yeah. Hey, what up, Atomic Joe? He said Oracle stock. Where can I find your best list of stocks in all sectors? I don't really have that. But if you want to see, if you got any questions for me, I got a bunch of portfolio. If you go to my YouTube channel, by the way, YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I do stock portfolio updates all the time. So you can see every stock that I own, how much I'm up and down on all of them, why I bought them. So yeah. Or if you have any questions for me on the stream, let me know. I'll try and answer it live. So anyway, here's Oracle right here. This is a huge cloud play. Check this out. Yeah, look at that. 85% of the revenue comes from their cloud and licensing revenue. And check this out. Basically, we want to go to the bottom line here, the net income, and look at this. If you average it out here, they're easily making over $3 billion of net income every single quarter. So they're printing net income. You also get a nice yield, 0.7% dividend yield. That's a pretty good yield for the stock that's appreciated so much. As you know, when the price of the share goes up, the yield goes down. Whenever the stock price goes down, the dividend yield goes up. So the yield is so low because the stock has just been doing so good. But anyway, I like Oracle. It's a huge cloud play. Like big investments from SoftBank and stuff. So yeah, buying it. Benet said, what do you think on Nvidia? So yeah, let's do Nvidia, man. So, world's largest company right now, they're a $4.34 trillion company. So again, for this company to double, they would have to go to an $8.8 trillion market cap. So it's tough to really double your money on Nvidia, but I could still see that happening by the end of maybe they'll grow double digits every year. But look at this. Obviously, we know Nvidia, huge GPU market share. They have a 20% PC GPU market share. It's crazy. The automotive revenue is growing as well. Lucid is using Nvidia's automotive software for their autonomous cars. And also, they're a big data center play. Again, data centers need GPUs, and Nvidia makes their own GPUs. So that's why it's genius for them to get into the data center business. But again, look, the best thing we really want to look at here is this bottom line. I mean, Nvidia's printed money. I mean, nearly 20 billion plus in net income every quarter, and it's growing like crazy, up 30%, up 80, up 100. So at these growth rates, what's it going to be this time next year? They're just so growthy and phenomenal company. So let's see. SoundHound AI just had a big dip. So yeah, we can look at SoundHound AI. Hey, Two Trick, what's up, man? Can you analyze Papa John's? Yeah, we'll do Papa John's pizza. You're better off catching a crypto dip right now. Wait for Nvidia to get a little hiccup. What up, me? So here's SoundHound AI right here. If you're a shareholder of SoundHound AI, there's really just one thing you want to watch. And hey, Atomic Joe, thanks for the 6 roses. I really appreciate that, man. So if you're a shareholder of SoundHound AI, there's really one thing you want to watch here, and that's this subscription service revenue, because that's 75% of the business and the biggest growth factor. So check this out. Yeah, have a great rest of your Saturday, Joe. See you later, man. So yeah, look at this subscription service revenue. This is the incredible part about SoundHound AI. It's how growthy they are. It's up to a new record, 32 million of revenue, up 781%. It used to be nothing. Look at that. Barely any revenue. Now it's exploded. So at this growth rate, what's it going to be this time next year? Incredible growth. We can also see the analyst expectations. Look at that. Analysts were expecting 32 mil. They reported 42 million of revenue. So they had a nice little beat. But they are still struggling with net income positivity, but that's all right for now because of just how growthy the sales are. So yeah, that's really what you want to watch for them. So yeah, can we look at Papa John's Pizza? Yeah, so that's ticker symbol PZZA. So yeah, Papa John's Pizza unfortunately has been struggling. They're the same price as they were, back in 2018. They do have a nice little dividend though. Let me check this out actually. So yeah, look at that. You get a 4% dividend yield. The payout ratio is a little high. Let's go see here actually. So Papa John's Pizza, commissionary sales, company-owned restaurant. How are the company-owned restaurants doing? So yeah, they kind of lost the growth. I mean, look at this. Dang, that's unfortunate. What about the commission revenue? This is kind of like the high margin segment of revenue. So that's up 9% year over year. Well, let me just see the total revenue. So total revenue is up 4. Net income is dang. So they're barely making any money now. Was that real? Dang. That's unfortunate. So the margins have collapsed on this company. They literally made 9 mil of net income. They're just not making any money. Let's see. So they're making, let's just call it 10 million of net income a quarter. Let's go see how much the dividend costs just to get that idea. So the dividend costs 15 million. So at least very minimum, this company needs to make 15 mil of net income. But yeah, that's a pizza play. I like DPZ better. What up, Spread the Wealth? What's up, man? What was platform to use. Yeah, hey, TCX, this is a brokerage right here where you buy stocks and stuff. If you want to get this little app I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, but you can just type it into Google. It's just a brokerage called Moomoo. But if you sign up with my link up there, deposit $100, I'll both get 5 free stocks. So yeah, what up, Spread the Wealth? He said Zetta Global. Let's check it out. Can you review of TSSI? Yeah, let's look at TSSI as well. I do own them, I believe. All right, let's see. So here is Zetta Global. They believe they just reported earnings, and the earnings are really good. Like they beat what the analysts were expecting. Let me just verify that. So yeah, here's the orange line is what the analysts were expecting. They were expecting 296 mil. They made 308. Beat on net income losses, beat on EBIT. So it was a triple beat quarter. I love how growthy they are. Like, look, revenue's up 35% year over year. The losses have narrowed by 55% year over year. So that's great news. They're growing their margins faster than sales. They have a phenomenal balance sheet. Look at how they deleverage their balance sheet. You know, the liabilities used to be 65% of the assets. Now it's only 38 while growing the assets. So great balance sheet, great cash flow growth. Look what's the actual free cash flow numbers here. That's what FCF stands for. Yeah, look at that. Free cash flow is up 71% year over year. So pretty cool. So yeah, this one's kind of like a hidden gem, smaller cap, you know, only a $4.6 billion company, but I like everything about that company. Everything's heading in the right direction. So yeah, good pizza, but no net income. Yeah, exactly. Unfortunate. So let's look at TSSI. Let me actually check my Roth IRA. I might own that one. Okay, so yeah, so this one has been struggling hard. And again, with these risky kind of companies, you can't have a huge portion of your portfolio in them. Like, look at this. It's literally a $92 position for me. Here's why I don't normally talk about these stocks, because if you look in the middle here, they're only a $430 million company. So normally I don't buy stocks that are only worth like $400 million, but here's why this one has interested me. And I bought them before they reported earnings, and the earnings were slightly disappointing, showed some slowing growth. But check this out right here. Let me show you the exact market cap. If you look in the top right, $420 million company, okay? This is a $400 million company, and they're making net income every quarter. So out of all the $400 million companies out there, you know, I'd want one that's making net income every quarter. And look at the growth of the sales. Sales went from 12 to 43 mil. Look at these year-over-year growth rates. It was up 500% last quarter, 260% this quarter. So I'm surprised the net income was only up by 5%. That's what really was weird. Can we get the, there's no, no analysts cover this stock because it's a $400 million company. But again, if you want exposure to that stock, you have to have it as a very small chunk of your portfolio. You know, it's a $400 million company, and they're diluting you too. Think about grabbing some of that on the dump. Good time to add though. Yeah. Oh yeah, Crispy. This is the stock I was thinking of. So we just looked at TSSI, and then there's ISSC. This is another company I'm potentially going to add to my Roth IRA. It's another very small one. Look at this, a $250 million market cap. If you look in the top right, only $250 million market cap. And again, out of all the $250 million companies, I'd want to buy one that's making this sort of net income. 3 mil this quarter, 5 mil last quarter. You know, that's great news. And look at the sales growth. Sales are up double. They went from 11 to 24 mil, up 105%. And they have a great balance sheet as well. So this is another one, ISSC. Out of all the small caps out there, they're on my watch list. Those are the kind of ones I'd want exposure to. Ones with good quality fundamentals that you can trust. You know, you don't want to buy the $400 million company losing a couple $100 million a year. Worth increasing position in TSSI. I did just buy one more share of them. You know, I'm being super slow, and you have to be super patient with these small market caps, like DCTH as well. It's another couple $100 million name. GHM, like $400 million name. So I'm being careful to dollar cost average down. Yeah, let's see here. Yesterday I saw UUUU pumping. Is that the uranium company? So yeah, here's uranium fuels. Wow, yeah, they were up 12% on Friday. You know, everything was green on Friday, really. If you want, I believe that's a uranium play. If you want exposure to uranium, you could get that stock, or you could just buy the uranium ETF, ticker symbol URA. Look at that. Stock is pretty close to an all-time high, or the ETF. And it has some great names like Cameco, OKLO, which is all right. UEC, which bought a $500 million uranium mine from Rio Tinto. But honestly, the best uranium stock out there is Cameco, ticker symbol CCO. They're Canadian. The United States is buying uranium from Canada now instead of from Russia. So what up, user 83? He said Costco. Yeah, hey, let's check out Costco. And we can look at NU Bank. The financial sector holds 24% of the market. So what stocks do you hold it there? Yeah, I own, for the fintech space, I got a lot of fintech names. I got Robinhood, SoFi, Dave, Futu, T Rowe Price Group. So I do have a lot of fintech stocks in my Webull portfolio. But let's look at Costco right here. This is another great company. You know, you have to have a subscription to get into Costco. So they're making money every month off the subscription, whether you go there or not. And when you go and buy stuff from there, you're buying it in bulk. So buying stuff in bulk, so you feel like you get a good deal. Very well-run company, but the one thing keeping me from buying this company is just the valuation. Yeah, you're right, Looney. He said Costco's too expensive. Yeah, they're trading at 55 times net income. It's a tough buy at this valuation, but they're always going to be at a premium. They're like the most well-run grocery store. You know, I actually own a different grocery store. I actually own ticker symbol SFM. This is Sprouts Farmers Market. It's a healthier kind of grocery store. They're at a 27 forward PE. For grocery stores, there's one thing you look at, and that's what the net margin. You know, the margins are very low for these grocery stores. And for Sprouts Farmers Market, they've been expanding their margins like crazy. That's why Sprouts Farmers Market literally looks like Nvidia. Like this stock literally from 20 to 150. How'd that happen? Well, because they had this unexpected margin expansion and pricing power at Sprouts Farmers Market. Margins grew 20% year over year. Oopsie, 32% year over year. So they're just really growthy. So yeah, let's see. Oh yeah, I wanted to look at in-use stock. Sell all your KO and get, hey, what up, Jay? Let's see. In-use stock. This is another. Well, actually, this is like a crypto-related play. So this is actually a crypto bank out of Brazil in South America, and that's where you really. They're a crypto bank, and that's where you want to be a bank for crypto, because the currency down there is not good in South America. So yeah, if we do look at where the revenue comes from, do beware. 93% of it comes from just Brazil. So that's the market you want to be in now. But look, this is why I love this company. The profits, man. They're making 500 million plus in net income every quarter. And this is in USD. Also, Warren Buffett, well, not exactly Warren Buffett, but his company, Berkshire Hathaway, does own a little bit of this company as well. So very interesting. Growing their margins too. Revenue's up 29, net income's up 30. So anyway, end-user very cool kind of crypto proxy stock. Great company, great hot dogs. Hey, hey, what up? Stocks to buy. He said, it's only licensed to sell uranium. Oh, WULF. Accumulate lows, it'll pop in a few months. So this is TeraWulf. I believe this is just a Bitcoin mining company. I don't know though. Let me actually go verify what they do. So yeah, look at this. If you look at where the revenue comes from, 100% of it comes from digital currency mining. So some sort of crypto related stock. And yeah, look at the sales growth. It's been pretty good. You know, up 33% after growing 200%. So revenue's good. They're still not making any net income, but I'm guessing you really just look at the net asset value of the Bitcoin versus the market cap. So something like that. Hey, what up, the Ace? Good to see you, man. Happy Saturday. Yeah, we normally don't stream on Saturdays, but I wanted to today. And someone said to look at CoreWeave. Hey, that's a company owned by Nvidia. So if we go back to the Nvidia portfolio, you know, Nvidia is so big, they own some individual stocks, and 85% of their portfolio was in CoreWeave. You know, Nvidia was buying the dip on this stock at around the IPO at the $40 level. But you know, it's like a mixed bag here. Here's the great news about the stock is they're super growthy. I mean, look at this. Revenue went from 400 mil to 1.2 billion, up 3x. That's really good sales growth. So that's the one saving grace here, but they are losing a lot of money, a couple $100 million a quarter. Insiders are selling a bunch right now. I wonder if we can like get that exact news. Yeah, it was like down here. It's kind of cool. There's like an AI little summary you get, or like a weekly brief. I don't know. Jane Street acquired a 5% stake in CoreWeave. Anyway, I don't know. I know a lot of insiders have been kind of selling out. But I like the growth there, but I'm still waiting a little longer. Sup, I hit the like. Hey, thanks for hitting the like button, man. I appreciate that. Yeah, hey, by the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I sell nothing. I'm just on here giving my opinion. So if you want to support me, best way is just hit the like button, hit the subscribe button. So anyway, here's Google right here. This one's at an all-time high. By the way, I do own this one, so I might be biased. I'll show you that right here. They're in my main dividend growth taxable account right here. So if we go to this, I got 19 shares of Google, and they're pretty much at an all-time high. This is like the perfect buy and never sell stock. We're up 27% on my shares, but actually there was a lot of news. You know, Apple explores using Google Gemini for AI integration. Waymo secured their permit for NYC, which is like an autonomous driving thing. And this is a huge news. Meta signed a $10 billion cloud agreement with Google Cloud. Meta did, and that's going to be over $1 billion a year just from Meta and the Google Cloud business. And that's huge. So if we go to the Google Cloud business right here for Google, it's 14% of the revenue. It's been so growthy. So it's going to be even more growthy now that Meta plans. So it just hits a new record every year. Google's like an ETF in one, man. They have the search business. They literally own YouTube. They literally own Android. They own Waymo. They're in quantum chips. They're just so innovative, and they're buying back their own stock. They're doing margin expansion. Like, look at this. Sorry if I'm talking too fast here. But look, revenue's up 13, but profits are up 19. So it's another company expanding their net margins. But look at this right here. What is Google doing with nearly 30 billion in net income a quarter? I mean, look at this. 28 billion of net income just this quarter. What is Google doing with all that money? Well, check this out. This is why the stock just doesn't go down. They buy back their own stock like crazy. 13 bill this quarter. They pretty much spend 14 to 15 billion every quarter solely buying back their own stock. And here's what that does for you as a shareholder. If you take one thing away, try to take this away. So that share buybacks are important. And look at this. So the net income is up by 19, but the net income per share. So, if it loads here. So yeah, net income's up 19, but we're about to see the net income per share be up a lot more than 19. Yeah, it's up 22. So you own nearly 3% more of the company than you did a year ago. And that's huge. So anyway, what up? Fintech IFS, please. Let's see. What is IFS? Bro, keep saying thanks for Futu. Yeah, dude, Rambo. Futu has been an incredible performer. I just made a YouTube video about this stock right here. Actually, if you want to check out my most recent YouTube video, it's a whole video. I called this stock is the next Robinhood. And this is a very cool company. 50% net margins. I feel like they're going to continue to hit new all-time highs. The forward PE is under a 22. So they could go... There's so much upside potential for this stock, even though they're at all-time highs. But they're, in my opinion, the next Robinhood. But let's look at this stock right here. This is IFS. What's up? Practical Paul said, look at IFS stock. Let's do it. So look at that. They're pretty much at a new 52-week high today or on Friday. So congrats if you own this one. So look at that. So this is a different currency. I should know what country that is, but I don't. What is PEN? And I actually let me just go find what. Sure, someone in the chat will beat me to it. Yeah, hey, sorry, my Wi-Fi is kind of bugging right now. Let's see. So their country is Peru. Okay, so they're headquartered in Peru. Okay, that's interesting. So let's see. Oh, so yeah, look at that. If we go to where the revenue comes from, 96% of the revenue comes from Peru. Probably could have just looked here. And then the Panama. So anyway, what are they? They're a banking company. So they're in banking, insurance. How's the insurance business doing? Oh, we don't get too much data there. But let's see the actual profits here. So yeah, the revenue's up by 3, net income's up by 68, so they're growing their net margins. That's really good. You know, they're making close to 100 mil of net income a quarter. We hope they keep that up. And yo, no way, Dr. One Fly. I didn't even see that. Thanks so much for like the 10 gifts, the 20 gifts. I really appreciate you for all the roses. You got a stock you want to look at, let me know, Dr. One Fly. I appreciate you. But yeah, anyway, this one seems, I can see why they're doing good. I mean, growing margins. What's the yield? I bet they have a good yield. So yeah, look at that. Banks usually have a nice yield, and you get a 2.63% dividend yield with this company. So that's, I guess, if you want exposure to a Peru bank. Food 200. Yeah, you're right. Stocks. You're right. I like Bull better than Moomoo. Actually, if you watch my most recent YouTube video, I do a comparison of the two. So actually, let's look at this stock right here. So here's FUTU stock. I just made a YouTube video about it, so I can kind of give you my thoughts. I think they're going to be like the next Robinhood. They're going to, Robinhood is so innovative, so growthy. Futu's doing better though. They're making more money actually. So here's the good thing about Robinhood though. I'll be quick. Like they're so growthy. Like look, revenue's up 45. They did 990 mil of revenue. Out of that 990 mil of revenue, 386 million of that was after tax net income. They have incredible margins, 40% net margins. But let me actually show you this stock. I believe is going to be the next Robinhood, and they're trading at a 22 forward PE. So even though the stock's at an all-time high right now, they're trading at 26 times net income. The forward PE based off the next 12 months is a 22. I feel like there's more upside here. But anyway, yeah, so brokerages, here's how they make their money from brokerage commissions, obviously, and interest income. Let's see how the commissions are doing. Up 86% year over year, and interest income, that's up 43. But here's the best part here. So look, revenue's up 69, record quarter. So revenue's up 69, and the net income is up 111%. So this company literally has, you ready for this? It's like a 48.5% net margin. You're talking faster than your search engine. Hey, sorry, I'm talking too fast. By the way, if you missed anything, I'm streaming on YouTube as well. You can kind of replay it on there. YouTube channel is called Nathan Roberts. It's also in the link tree in my bio. I'm streaming on there as well. If you miss anything, you can replay it. But yeah, 48.4% net margin. Net margins grew by 25% year over year. They're just printing money at this point. So anyway, I really like FUTU stock. And they do special dividends. it's just a great stock. I feel like it's gonna be a winner in the long run. So yeah, and it's tough to buy them in here at all-time highs. So I just put that one on your watch list. They're actually I think largest third largest holding in here. AMD is my largest, then Disney. Yeah. So let's see. Yeah, you're right. You're right, Rambo Dash. You get some of that exposure too. So let's see. Yeah, well, let's look at Webull as well. So Webull did just IPO about a couple months ago. This day right here. And here's the thing with Webull compared to Robinhood or Futu or even Interactive Brokers, they're just not making much money right now. Like this is the good news though; they are making net income every quarter. So look, 12 mil this quarter, 10 mil last quarter. So that's good news. Low margins right now, 11% net margin, but that means there's a lot of growth for them to grow in the future. Webull, hey, I have a Webull account right here, so I've given them a lot of transaction fees and stuff. They got out of the crypto business, and that's what Robinhood and Futu have been so growthy, and a lot of the money's come from the crypto transaction fees, and Webull doesn't get that yet. Maybe they'll get that in the future, but anyway. Oh, Dr. One Fly, again, thanks for all the roses there, my friend. So he says ABAT, American Batteries. So let's check it out. So this is a micro cap. If you kind of look in the top right, it's a $244 million company. So just know that they're only worth $240 million. But let's see, are they? Yeah, the revenue isn't much, 900,000 of revenue. They're losing 10 mil a quarter. Luckily, they have a really good balance sheet. Let's see how much cash they get. Oh, well, 3 mil of cash. This one, I would just be careful with this one. Just because they're only worth $200 million. They don't really have much sales, and they're losing net income every quarter. It's tough. Analysts were expecting, look at that, 13 mil of revenue this quarter, and they only did 200,000. I don't know. I would just be careful just because they're so tiny. So let's see here. Cardi said BIR stock. Let's see. What is BIR? Yeah, so hopefully I get to all the stocks here. Let me know if you're talking about BIR Financial or is that an Australian company, a Canadian company? Let me know the name of that one. So what up, Nathan? He says Recor Systems. Yeah, hey, I don't know what that. Give me the ticker symbol, by the way. Yeah, if you guys got any stocks you want to look at, let me know the ticker symbol and I'll check it out for you. I got you. So let's see here. JEPQ. So this is actually a covered call ETF. So this just sells calls on the NASDAQ 100. And if you notice, like the NASDAQ 100 is at an all-time high, but this isn't. And that's because they sell calls on the NASDAQ. And if we go to the dividend yield, because of that, that's really an asset you want to sell calls on if you're trying to make a lot of income. So basically you're buying this to maximize your dividend income. You get a monthly payment, 11% dividend yield. And exposure to the NASDAQ, but they just sell calls on the NASDAQ. So you won't outperform in the long run, but you're basically buying it to maximize your dividend income. So let's see. SOXX, what's your preferred growth techie? I like QQQM. I think this one, this is just a pure semiconductor play. So let's see. Let's go its top holdings right here, fund. So yeah, if you're like, I don't know whether to pick which one to pick myself. Do I pick AMD, Nvidia? I don't know which one to pick. Well, you can buy SOXX, the ETF, and it just diversifies all your money for you. I actually like how AMD is the top position over Nvidia because Nvidia is already a $4.4 trillion company. For you to double your money, they'd have to go to an $8.8 trillion market cap. But these are all great. I'd happily own all these individually. Lam Research, Qualcomm. Yo, no way. Lonnie, hey, shout out on the YouTube stream to Looney. He just gave a super chat at $2. I really appreciate you, man. Thank you so much. If you got another stock you want to look at, let me know. Yeah, by the way, I'm streaming on YouTube as well. That's the best way to support me. Watch the stream from there instead of TikTok. But anyway, someone said the BITO dividend. So yeah, this is basically another covered call ETF, but this one sells calls on Bitcoin. So notice the huge yield. Yeah, look at that. A 52% dividend yield. But notice it's supposed to follow Bitcoin, but Bitcoin's at an all-time high. This one is nowhere near an all-time high, or like well more than 50% off its all-time high. So again, this is another one you're basically buying to maximize your dividend income. Shouldn't really outperform Bitcoin in the long. It won't outperform Bitcoin, but you're selling calls on it. So yeah, that's why the yield's so high there. So let's see. REKR. What up, Nathan? Let's check it out. Hey, thanks again, Looney, for the $2 super chat. I appreciate it. What do you think about Trump buying Intel? It was the government that bought Intel? Yeah, we'll look at Intel after this. So here's Recor Systems. Again, I'd be really, really careful with this one. If you look in the top right, they're only worth 147 million. So that's just a very small market cap. The stock's at an all-time low. Stock's the same price that it was back in 2018. Let's see what they do though. So do they have sales? So the business just isn't growing. The sales are down 0.5% year over year. They're losing like 10 mil of net income a quarter. And because of that, that's why the assets are going down. To be honest with you, man, nothing's just blowing me away here. I mean, the sales aren't growing. The net income's negative every quarter. It's just a really small company. I'd just be very careful with that one. Yeah, very small market cap. So that's one you want to like swing trade or something. You don't just want to buy and hold that one for the long run. You probably want to swing trade it. So let's look at Intel right here, INTC. So INTC, this company, actually, ever since the government took an 11% stake, I mean, that's game changing for the stock right here. Really does change the future. I think SoftBank also took a stake in here. Let's see. Yeah. Oh, here's the news right here. So Intel secures a $9 billion US government investment, and they took a 9.99% stake. And they commit over 100 billion in semiconductor expansion, obviously. But anyway, we don't really look at their financials right now because it's all going to change in the future. But for right now, the financials are awful. I mean, they're burning money, man. I mean, look at this. $3 billion this quarter, bill last quarter, 17 billion this quarter. And look, if we zoom out, this company used to be great. I mean, if we look in 2021, when they still had Apple, every Apple iPhone used to have an Intel chip in it. Now they use a Broadcom chip. They don't use Intel anymore. They used to make $8 billion a quarter. Now they're struggling hard. So that is why the stock has been struggling so much, is because the poor fundamentals. So it's actually great now that the government took a stake in this company. Actually, if we zoom out to the monthly chart, Intel is the exact same stock price that it was back in 1998. So anyway, the government deal is game changing, and I do like that. Hey, what up, Brick? He said Ally Financial. What's the ticker symbol for Ally Financial? Got to get worried about more stocks. Thanks to the channel. Deal Wolf and Google. That might be why Wolf stock rallied so much, because of the Google deal. Google given nuclear energy power. Hey, that's great. My favorite nuclear play right here, if y'all are looking for just the purest nuclear energy play, it's actually ticker symbol CEG right here, Constellation Energy. They own the most amount of nuclear reactors out of any other publicly traded stock. I do own them, but just a phenomenal unregulated utility, second largest utility in the world, right behind NextEra Energy. So let's see. Hey, thanks, Doctor. Hey, thanks for tapping the screen there. I appreciate that. I know it struggled, but thoughts on PPYL? Maybe, is that PayPal? No, wait, PPYL. I can't find that one. Maybe he means PYPL. I'll be quick about this one because I don't know if this is the stock he's talking about, but this is PayPal right here. PayPal, unfortunately, is lower than it was in 2017. So you bought Intel in 2017 or PayPal in 2017, you're down on your money, which is crazy. And the business has kind of started to slow down. I mean, if we look at this multiple right here, they're trading at like a commodity multiple of 14 PE, like they're expected to not really make or lose you any value as a shareholder. But here's the thing. They're growing single digits, like mid-single digits, like revenue's up 5%, which is great. But look at this net income right here. They're making over $1 billion of net income every quarter. And this is the best part about this company. So what is PayPal doing with $1 billion of net income every quarter? This is the huge news. Because the stock's undervalued, they're buying back the life out of their own stock, spending 1.2 to 1.5 billion of net income a quarter buying back their own stock. And here's what that does for you as a shareholder. So look at this. The net income was up 11.79, or the net income was up 11.8, but the net income per share was up 19. They have bought back 8% of the entire company in just 1 year. So you own 8% more of the company. They're just buying back their own stock like crazy because they don't pay a dividend. They don't. So anyway, they're interesting. It's like a buyback play. Yeah, Intel's slow bleed. Yeah. So ALLY. Actually, I could have guessed that. Hey, Ally Financial got the ALLY ticker symbol. So I believe this is like a bank right here. What's the yield on this company? Let me check. I remember them having a nice yield. Yeah, look at that. So if you buy this stock, you get a 3% dividend yield. Pretty good. Let's see. So automotive finance operations. So it looks like most of the revenue comes from automotive finance loans. I didn't know that. And then they have the insurance operations. That's up 23% year over year. Not bad. Let's just go look at the net income down here. So it's a little choppy, but if you average out the 4 quarters, they are technically making net income every quarter. Someone said, I owe a lot of money on my Ally credit card. Or, what up, Uber? What's up, man? So, yeah, anyway, I want to see more growth. Like, look, the revenue's only up 3. I want to see more growth with Ally Financial. I think that's why, they've kind of been flat for a year. Like, look at this. Stock's been flat for a while, probably just because of the slowing growth, but kind of a value play. What happens is, hey, Derek, I'm on a brokerage right here, by the way. If you want to get this little software I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too. Or you can just type it into Google. It's just a brokerage called Moomoo. So Mr. Lucky, said, can we look at XYZ? Yeah, this is the company that owns Cash App. So this is another stock that looks just like PayPal, like they're the same prices they were back in 2017. Very similar business, Cash App and Venmo. Or yeah, PayPal owns Venmo, right? And that's that thing that's very similar to Cash App. And yeah, look at this company. 63% of the revenue just comes from the Cash App and the Square business. But they just got added into the S&P 500. And here's the one disappointing thing is that they're just negative growth. I mean, the lifeblood of the company, the sales are actually down 1.6. I would like to see some growth of the revenue again, but their printed net income, making a couple $100 million of net income every single quarter. It was a record quarter. Wow, the margin expansion is crazy on Cash App. I know they're getting into some like brokerage services, but the profits here were up basically 40, 50% year over year, even though the sales were down. So they've been able to grow their margins. Leah, what's the gross margin? Yeah, gross margin grew by 15. Crazy. So anyway, that's Cash App. I believe they also just got added into the S&P 500. They do car loans. Who knew? Hey, yeah. So MasterCard versus Visa. You know what? There's like a cool comparison tool that we can do. We can pull up Visa. We can pull up MasterCard and American Express. You know what? We'll compare all the companies. Here's the market cap of the 3 right here. Visa's a 700. But there's so many cool features on here. The PE ratio. So look, Visa's or American Express is the cheapest, but Visa is trading 30% cheaper. Here's the different dividend yields. American Express is the highest yield. Anyway, that's an exact comparison. Let me just show you why I love Visa stock right here. Check this out, man. So if we look at the profits Visa's making, this is ridiculous. So, the small little credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. And look at this. Visa is making basically $5 billion of net income every quarter. So what is Visa doing with extra $5 billion of net income a quarter? Well, check this out. This is what I love about them. They're so buyback friendly, man. They have so much leftover money to play with. They're literally spending $4 to $5 billion every quarter. They're spending over $1 billion a month solely buying back their own stock. And here's what that does for you as a shareholder. Again, the net income's up by 8.2. Net income's up by 8.2. But net income per share is up by 12. This is your return as a shareholder. It's amazing. And you get a nice little yearly growing dividend. So again, the yield's low, but really the buybacks really make up for this. So because you get 0.65% of your money back in cash a year, but you're really getting 2% of your money back a year in a non-cash dividend via share buybacks. So that's what's crazy. Yo, Benjamin, what's up, brother? Thanks for the rose. I do appreciate that. Catherine, hey, how's it going? Ally credit card charges 30% interest. That's not great. What do you think about when business stock trades below value? Should we invest in them like an Alibaba stock? So yeah, here's Alibaba. This is like the Chinese Amazon. So first off, they are Chinese, so they just like inherently trade at a low multiple. But yeah, look at this multiple right here. They own AliExpress basically, but they're more business to business because like a business will buy a bunch of stuff from AliExpress and then sell it themselves. They're more business to business and business to consumer, more like an Amazon. But they're trading at 16.5 times net income. Very fair. Look at this net income. I mean, if you average it out here, they're making well over $4 billion of net income every quarter. You get a nice yield now. You get a near 1% yield, very low payout ratio. So yeah, that's kind of like your Chinese Amazon play. They actually are a decent value. Any thoughts on MicroStrategy? And Target. Oh, Louise, actually, let me look at Target first. So Target has been not doing too great. They just got a new CEO. They reported earnings. Let me see how the earnings were. So yeah, look at that. Target stock is just not, the chart does not look good. This is really a big dividend play now because look at that. You get a 4.5% yield and the payout ratio is only a 50%. And look at this multiple. I mean, Target's more discretionary than like a Costco or a Walmart than your traditional grocery store because they sell a lot more than just groceries, like household essentials, apparel and accessories, home furnishing and decor. more discretionary stuff than just like a grocery store. And oh yeah, that's not great. So look at this. Sales are down by 1%. So the whole business declined by 1%, but the profits, the net income fell by 21. So not great. The margins dip there. Yeah, dang, 20% dip in the margin. Dang, and that was real as well. That's unfortunate. So that's one thing you do got to be careful with on Target is they're just not growing anymore, but I think they could be decent value. Like, let's see, they made 935 mil in net income. Are they expected to keep that up? Well, they're expected to go even lower next quarter. But anyway, they made 900 mil of net income this quarter. How much does a dividend cost? You just go to the cash flow statement, and the dividend only cost, where is this? 509 million a quarter. So yeah, they can easily afford the dividend. I don't love that, basically 60% of all their revenue is being eaten up by the dividend, but you get a nice yield there, 5% yield. All right, let's see. What app is this? Oh yeah, hey, by the way, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this little app I'm on, it's in the link tree in my bio. It's the very first link there. It's an affiliate link too, so if you sign up and deposit $100, we'll both get 5 free stocks. Or you can just type it into Google. It's just a brokerage called Moomoo. It's my favorite app for analysis, lowest fee brokerage out there, in my opinion. Favorite. And I have all these other ones too. Like I have a Robinhood account, but you're just not going to analyze a company on Robinhood. This just doesn't have good analysis tools like this app does. So this is my favorite one. I'll see a link tree in bio, first link there. How to check dividend? Yeah, so let's see. UNH, can you check this? Yeah, here's how you check the dividend. So you just go to the company right here, and then you just click on dividends. And we can see United Healthcare has a 2.8% dividend. The payout ratio is right next to that. 52% payout ratio. We can see they raise their dividend every year, which is cool. But, here's the thing about UNH. The future is so uncertain with this company. So they're trading at a 13 PE, very cheap historically. We're a customer. We use OptumRx. OptumRx hit a record. It's up 19% year over year, also to a new record. But the reason the stock is at such a low multiple is because the expectations are very not good. I mean, the net income is expected to collapse in legit 50 more percent. It's not great to $1.70 of EPS. The $1.70 can't even afford the dividend. The dividend costs $2. They have to at least make $2.21 of EPS a quarter to afford the dividend. And unfortunately, United Healthcare, their analysts are projecting them to not even be able to afford that $1.70 in 2 quarters. So that's why the multiple is really low, because the future uncertainty. But so I think Warren Buffett just bought the dip on them, man. How do you receive the dividend after purchasing your shares? So yeah, all you do, you kind of you go to the More tab, you click on Fund. Here's how I'll just show you my dividend history. If you want to replay this, you go to Corporate Action, Dividends, and boom. So I don't have many dividends, but yeah, we received a $5 dividend from Coca-Cola, Amphenol 4, Powell 4, Comfort Systems 5. So that's how you check the dividend. So let's see, what stock you buy next? Well, it's tough to buy stuff, especially after Friday's little rally. But one company I have been loading the boat on, you can kind of see whenever I buy a stock, it shows my little buy order. I've been dollar cost averaging into Coca-Cola Consolidated. Pretty cool company. Again, be careful dollar cost averaging. Like if you're going to continue to buy a stock, like I did right here, I dollar cost average into this one, but still doesn't mean it's a good buy. You always want to do your own research. Make sure it's still a high quality company. It doesn't always save you. Again, none of this is financial advice. I'm not an expert. I'm just a college student. Another stock I've kind of been buying is another share of Amphenol Group. I mean, they're just going to continue to win. So I bought another share at 107. I'm not too ecstatic about buying shares of this one, though, at all-time highs. But, yeah. Let's see here. UPS has finally gotten low enough. So here's the thing about UPS, and here's how you can tell if a company is a dividend trap. Or here's how you can just see if a company can afford the dividend. So most people look at UPS, they're like, wow, I get 7.4% of my money back every year. Look at that yield, a 7.5% yield. Very good. Can UPS afford the dividend? Let's go see. So here's how you check that. You just go to the net income. In the most recent quarter, it was 1.28 billion. Let's just round it up. So let's say they made 1.3 billion of net income this quarter. So remember that 1.3 bill of net income. Well, here's the unfortunate part. The dividend cost 1.35 billion of net income every quarter. So literally all their profits, they couldn't even afford it this quarter, but all their net income is just being eaten up by the dividend. They have no leftover money. I think this one needs a healthy dividend cut. They can't invest in the future. They have to dilute you to raise capital or issue debt. I mean, they're just in a terrible position with that super high payout ratio unless things start to recover quick there. So I'd be careful with UPS just because that dividend payout ratio. I don't love it. Buffett paid $330. Yeah, Buffett paid $330 for UNH, and it's under that today. Do you buy any OTC? Not really. I don't own any OTC stocks right now. And I don't own any, but here's Dick's Sporting Goods. This is actually a very interesting stock. Just like a sporting goods store, and they have some monster performance. I mean, look at this. In 2019, it was a $50 stock. Well, this is 4x'd since 2019, and you've gotten a nice dividend. It's not only 4x'd, but you've received 2% of your money back, or even more than that, because you probably bought it a lot lower. They raise their dividend every year. You're getting over 2% of your money back a year in dividends. Very safe dividend payout ratio. What's the multiple on this company? So, let's see, that's the PE. This is the price in net income. They're trading at 16 times net income, and the industry average is a 22. So they could continue just keep on winning. And here's the net income they're making. They're basically making 200 to 300 million of net income every quarter. Sales are up 5. Net income's down, so they did lose the margins a bit. But anyway, yeah, are they doing buybacks? Let's see. They are. They've bought back. Wow. They've bought back 3% of all the shares that exist in the past year. Wow. You get a 2% yield, 3% non-cash dividend yield via buybacks, crazy stock price appreciation, low PE ratio. That's an interesting company right there. They kind of remind me of like a Dillard's, like a DDS. This is such a surprising. Y'all know that mall company, like store called Dillard's? This has been a multi-bagger. In 2019, this was a $50 stock. Now they're 500. They 5x. They're at an all-time high. I don't know how Dillard's is printing net income, but they are. All right, let's keep going here though. I don't trust. Yeah, what's your opinion on ULTY? Hey, that's a covered call ETF. Apparently the government is switching to nuclear and hydro geothermal away from solar and wind. Yeah, I saw that. They're not too favorable on wind and solar anymore, and they've been signing a lot of EOs on for nuclear energy, stimulating that industry. Why be careful? Yo, I just covered. Yeah, Wall Street. If you miss anything, you can replay it on the YouTube stream. Yeah, the dividend payout ratio on UPS is over 100%. All their profits. They have no leftover money. They're not in a good position. But yeah, if you miss anything on the stream, I'm streaming on YouTube as well. You can replay it. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. Let's see. Palantir is okay. I bought it around $160. So, hey, here's Palantir. You bought it at $160. It's at $158 today. No big deal. You're down like 1%. The thing that's unfortunate about Palantir is just the high valuation. I feel you on that one. Like the price to sales, not price to net income, but the price to revenue is 109. It's really expensive, but here's why they deserve a high premium. This is a company I won exposure to, just at a lower valuation. I love this company. They're so growthy. Everything about them is perfect for now. Look at this right here. The government revenue, is up 49% year over year. This is incredible growth. A lot of police stations are using the Palantir software. So the government revenue is up 49. Look at the commercial revenue with like S&P 500 companies like Google and little mom and pop ice cream shops. That's up 46% year over year, also to a new record. So they had their first ever $1 billion revenue quarter. So $1 billion of revenue exactly. And out of that bill of revenue, they made 330 mil of net income. So this net margin is ridiculous. They're growing their margin by 60% year over year to a 33% net margin. They have a fortress of a balance sheet. So Palantir actually has no debt at all and $6 billion of cash, up from $4 billion the same time last year. So Palantir's the cash flow is amazing as well, bro. Everything about that company is perfect, but too high of a valuation. Let's see. SoFi. Yeah, what up, ADRN? Let's do SoFi. I do own this one, by the way. Here, I'll actually show you my position. They're in my Webull account right here, which all time, I just like being transparent. We're up 17% all time, not exactly outperforming the market, but SoFi, I regret every share I've ever sold of SoFi, but we're up 330% on them. I bought them, where was it? It was right here, I think. Yeah, right there is where I bought all my SoFi. So I've been holding on to this company for a couple years. I love them. They have their own banking charter. They got their banking charter through a loophole that's now patched because of them. It's pretty crazy. But look at this right here. Here's why SoFi deserves to be doing so good, why they deserve the high premium. They're so growthy. People are really starting to take them serious. Their financial services business is up 105% year over year. That's incredible growth. So the financial services business has doubled. How's the lending business doing? Their main lending business is up 30% year over year, also to a new record. So if we just go to their combined revenue is up 42. And out of that, look at that. Total revenue was 850 mil. Out of 850 mil, 97 million of that was net income. So here's a company, super growthy, making net income every quarter. People are really starting to take SoFi serious, and I love them. They deserve to be doing this good. Intel $100 next week. Hey, that'd be a crazy little growth there. BBAI, yeah, BBAI, actually, we won't cover them. There's nothing of value there. Here's the thing. I mean, this is just a momentum play. There's no real financials here. It's a $2 billion company. So let's see, it's a $2 billion company. I think they missed on their expectations as well. Yeah, huge miss on the revenue. Analysts were expecting 40 mil, they reported 32. Dude, they missed on every metric by a huge chunk. So a declining business is down 18% year over year. They lost 200 million just this quarter. Dude, what's the market cap again? A $2 billion company that lost 200 mil of net income this quarter. That's over 10% of the entire market cap they've lost just this quarter. And it's not just this quarter, 60 mil last quarter, 150 mil the quarter before. They've literally lost 30% of the entire market cap of net income. I just can't trust that company, man. They're missing on every expectation. They're declining. They're burning through net income. They're just a momentum stock right now. So you can still definitely make money on that stock. It's just a tough buy. What app is this? Oh, yeah. Hey, by the way, I'm on a brokerage right here where you buy stocks and stuff. If you want to get this app I'm on, Gone Fishing, it's in the link tree in my bio. It's the very first link there. It's a brokerage called Moomoo. You can just type it into Google. It's a brokerage called Moomoo. But if you go to the link tree in my bio, first link, it's an affiliate link. So if you sign up and deposit $100, we'll both get 5 free stocks. Anyway, my favorite lowest fee brokerage, best for analysis. And speaking, here's another cool feature. Let's go to the Nvidia portfolio. So we can see Nvidia's portfolio. You can see like all the super investors like Nancy Pelosi. Literally by SEC law, they have to make all their trades public in this app. It makes it cool. You can like follow them into their positions whenever they make a trade, and you can set your exact weighting and stuff. But anyway, let me go back to Nvidia right here. Nvidia's portfolio, one stock they own, you're right, is APLD. So this is 4.6% of their portfolio, and they just had a huge partnership with CoreWeave. So one reason why this stock really gapped up on this day right here and continued to gap up on earnings was the great news from their partnership with CoreWeave. So APLD and CoreWeave have just gone to a huge partnership. They're also owned by Nvidia. Again, just because Nvidia owns a stock doesn't always make it a buy, but that one's really benefiting from being in the Nvidia ecosystem because Nvidia kind of orchestrated that partnership. Hi, I'm from India. Yo, Anna, nice to see you. Hello from India. Paladine, what's the ticker? Yeah, hey, give me a ticker symbol. I don't know what that company is, but if you give me a ticker symbol, I'll check it out. Yeah, what up, Ken? He said, SoFi was cooking the books until recently. Yeah, SoFi's finally have some great performance. So here's IREN. Yeah, we'll look at AMAT as well. But here's IREN right here. This is a stock that is super growthy. I love this company. So check this out. If we just go to their total revenue right here, this is what you want to see for a stock. I mean, the revenue after going 230% the previous year grew another 166%. So the revenue's at a record. And on that, they made net income. 25 mil in net income this quarter, 20 mil last quarter. So that's what I like about this stock. And look at this. They have a great balance sheet as well. So pretty cool for IREN. And here's actually one I'm going to stay away from. I don't just love being bullish on every stock, but someone said, and this is in the Nvidia portfolio. So Nvidia owns this stock. And here's why I am not buying this one. And I'm not financial advice. I'd recommend to stay away from this stock. I think they're going to continue to just keep on going lower, unfortunately. But here's RXRX. Look at this market cap right here. They're a $2.1 billion company. So kind of remember that this whole entire company is worth $2 billion. And look at these money losses. They lost basically 200 mil this quarter. So they lost 9% of their market cap this quarter, 10% last quarter, 8% the quarter before. So they've literally lost 40% of what the entire company is worth in net income in the past year. It's a tough buy, man. And the sales aren't good. Sales are 19 mil. But it's just tough. ARK owns some shares. SoftBank does too. Wow, ARK owns 7.6%. From a financial point of view, the terrible financials just explain why this stock has just been dead money. It's been like an anchor dragging off the bottom of the sea ocean. It's tough. So I would stay away from that one, although Nvidia owns it. So let's see, PDYN. Let's see. So this is Paladine AI. I haven't heard of this one. It looks risky though, because this whole company is worth $300 million. But let's go look at their financials because that's what matters. So product development, yeah, so they're basically a revenue-less company. So that's not great. The revenue was $1 million this quarter. You can't really own this stock. I mean, this is just a momentum play at this point. But $1 million of revenue. The revenue fell by 60%. Luckily, they have a good balance sheet from issuing shares because I didn't come from their balance sheet. But yeah, they're losing $8 million of net income a quarter as well. So yeah, this is another one that's just a tough buy. No sales, losing a lot of money. But it's just momentum right now. Paladine AI just sounds like a momentum-y name. So let's see. RXRX is burning money. Yeah. You have a bunch of brokerages. Do you have an app to consolidate all? Not really, Looney. Um, I have a self conflict, but decided to buy. Oh yeah, for Palantir. So let's see. PROP. What is PROP? So Prairie Operating. So yeah, we won't really cover this one. It's $100 million name. Stocks at an all time low. Looks like they sell an asset or something. I don't know. Looks like the revenue did just jump up though. Well, look at that. Revenue is now 68 mil. It says they made 20 mil of net income this quarter. I mean, if that's real, that's great news. We want to see them continue to keep that up. And it looks like analysts are expecting them to continue to make positive net income. So, and positive EBITDA. So if analysts are right here, I mean, I wonder why the stock's at all time. There must be something like I don't know here. That's weird. They're only $100 million name, but they're expected to make like 200 mil a year. It's weird. So, let's see. What do you think of DNN? Is that dining brands or oh no, this is Denshin Mines. So yeah, I believe this is like a silver or a gold company. They just own a bunch of mines. So yeah, mining is where all the revenue comes from. Do they have sales? No sales here. 900,000 of revenue a quarter. So luckily they have a good balance sheet. But yeah, losing 10 mil a quarter with a million of sales, it's tough. Selling BBL, yeah, I just don't think BBAI, if you're just looking for a stock to buy and hold forever, I don't think BBAI is a great one. But there's still money to be made on that, I'm sure. So yeah, let's look at ASML right here. Here's the lithography company, the chip making manufacturer. They have three main customers. I believe it's Samsung, Intel, and Nvidia. Those are like their only three customers. And here's the weird part. They just had a record quarter, all-time high record quarter, but the stock is nowhere near all-time highs, kind of like all the other chip plays are. Like AMD's doing great, Taiwan Semi, Nvidia, but this one isn't. And the fundamentals are great. Actually, I know why they're not doing too good. It was the guidance. So if we look at this dip right here, they gave guidance for single-digit growth for the next year. So kind of think about that. It's not great for this industry that they're in. I don't think investors wanted single-digit growth. But here's the best part, though. Look, revenue's up 35, all right? So revenue's up 35, but net income is up by 86. Another company expanding their net margins, a 35% net margin up 38% year over year. This is incredible from ASML. You also get a 1% yield on this company. So actually, I think that one's pretty decent. They're one of the cheaper plays, but we want to watch what happens with their future guidance. So, hey, I appreciate you, Benjamin. So Ashton said SNDL. Is that like sundial or I don't know what this is right here. This is a solar play, I believe. And the solar stocks have just been getting like scorched. So not great. Yeah. So look, they're a $570 million company at an all-time low. Oh, they're a Canadian company. So we'll switch the revenue to USD just to get a better idea of it. But yeah, so here's the bad news. Well, I mean, they did make net income this quarter, but they're kind of just burning through a bunch of net income right now, which isn't great. When you're only a couple $100 million company, losing 50 million is pretty devastating. But it says they made 2 million this quarter. That is very interesting. So it looks like it was real as well. They have a good balance sheet, a really good balance sheet. Let's see here. $155 million of cash, no debt. So it's not the end of the world for this company. Oh, actually, I'm thinking this is okay. So actually, if you read really quickly, that's what they do right here. I can't really cover that industry, but that's what that does. Okay, so it's not a solar company. I apologize. Hi, how's Opendoor looking for the long term? So here's Opendoor. This is really a momentum company right now. They're really begging for a lower interest rate environment. That's why they went up on Friday. If you're wondering what happened on Friday, the market rallied. Like if we look at my portfolio, we were up 2.2% on Friday. How'd that happen? Well, basically Jerome Powell came out and basically confirmed a rate cut next month. So literally in 30 days or less, with a 90% probability, interest rates are going to get cut. So this company really needs lower interest rate environment because this is a housing company. It's like Opendoor houses that you can buy. And look at this. If we look at the revenue right now, it's 1.5 bill this quarter. Look what happened in 2022 with the zero interest rate environment. I mean, they were making 3 to 5 bill of revenue a quarter. So And the losses are narrowing. That's another good news. They only lost 29 mil of revenue this quarter. We do want to see the losses narrow. It is heading in the right direction, but I think it's just tough. You can't really pay 3.4 bill, I think, for this one right now after the huge rally. But congrats if you own them before today. So here's a cool one. Someone said Reddit. What up, news? So Reddit. Sorry if I don't get to all the stocks here. I do want to get to all of them. But I do own this company, by the way, so I might be biased. But this is Reddit. They are not a meme company. They have phenomenal financials. I mean, if we just judge Reddit the same way we would any other company, that they deserve where they're at right now. They deserve to be doing this good. If we look at the revenue, I mean, how did Reddit pull this off? After going 50% the previous year, revenue's up another 77%. They were able to grow their ARPU, their average revenue per user, by 48% year over year. So they're making 48% more money off every user than they were the same time last year. So that's done wonders for the revenue and the net income. They're the most profitable they've ever been. 90 mil of net income this quarter. The free cash flow numbers are great as well. Over 100 mil of free cash flow a quarter, basically. So Reddit, and the best part is they have a fortress of a balance sheet. So check this out. If you go to the balance sheet, they have no debt and over $2 billion of cash. So just a monster company right there. I love Reddit. Super growthy. It was Nathan everyone. Yeah, hey, watch out for people impersonating me. Yeah, thanks for saying that, Kurds. Or cursing. I have this is my only TikTok account. I don't sell anything. I have no course book, Discord, WhatsApp, Telegram, none of that. Just on here giving my opinion. Only thing I do have is a YouTube channel. But yeah, I'll never follow you. This is my only account. There's no other Nathan Robert out there. Yo, no way, Tangrico. I didn't even see that. Tangrico, thanks so much for the heart, for the gift there. I really, really appreciate that. Thank you so much. So here's a cool one. Someone said Roblox stock. So Roblox to the ground, a JMod said. So yeah, if we go back to the super investors right here, here's Kathy Wood's portfolio. Kathy Wood owns a bunch of this stock. Yeah, we could look at C3 AI as well. Hey, what up, Kirk? He said Bitcoin. So we could look at Bitcoin too. So anyway, here's Kathy Wood's portfolio. 5.5% of her portfolio is just in Roblox stock. So check this out. Roblox stock, they fell right here on a lawsuit from Louisiana. Louisiana is like the state is suing them right now for safety issues. But look at this. Here's why they've been so growthy recently. Here's a cool stat we get. This is their daily active users. And the most recent quarter, they have 111 million daily active users. When this exact same time last year, they only had 79 million daily active users. So they're growing their user count like crazy. They're printing free cash flow. Free cash flow's up, but this is the bad news. They're burning through a lot of money, and the trend isn't getting better. They lost 35% more in net income than the previous year. That's thanks to this company's stock-based comp. They're literally paying employees $400 million worth of stock a quarter, and that's included in GAAP net income. You know, that's why it's not included in free cash flow. That's why the free cash flow is positive, but the GAAP net income is negative $300 million because of that. And they also are a bit leveraged as well, but basically the same amount of liabilities as assets. So I'd be careful with Roblox, but Kathy Wood owns them. C3 AI. So, I believe that's just ticker symbol AI. So yeah, they got a good ticker symbol. So here is AI. Yeah, we can look at Intel as well. So here's C3 AI. Dang, the stock is not done great. Let me actually see. So they're a subscription model company. Okay, and look at that. Actually, I do like subscription model companies. Looks like their subscription revenues at a new record for or fiscal year 2025. Are they making money? So yeah, here's probably the bad news. Here, this probably explains why the stock has just been dead money for a while. They're burning net income, basically 60 to 80 million a quarter. But they do have some decent sales growth. Sales are up 25%, but that's not helping the losses narrow right now. They have a really good balance sheet too. So actually, let's see. They have 750 million of cash, no debt. They have 750 million of cash, losing 250 mil a year. So they still have like 2 years left of cash, a $2.5 billion company. We really want to see them start to get net income positive. And AMA said, what Jap is this? Yeah, hey, I'm on a brokerage right here, by the way, where you buy stocks and stuff. If you want to get this app, it's in our brokerage. It's in the link tree in my bio, the very first link there. Or you can just type it into Google. It's a brokerage called Moomoo. But there's also an affiliate link. So if you set up, we'll both get 5 free stocks if you deposit $100. First link in the link tree in my bio. Anyway, let's keep going here. Intel. So let's look at Intel right here. This company just got a huge stake from the government. So I'll show you that right here. Intel. Sorry, my Wi-Fi is kind of bad right now. By the way, if you want to hit the follow button, we go live every day. So yeah, here's Intel right here. If we scroll down to the news right here, yeah, this first key event here, Intel secures a $9 billion U.S. government investment. So the U.S. government literally owns 9.9% of all the shares, and they're committing over 100 billion to U.S. manufacturing expansion for semiconductors. But so this new government deal is really game changing for Intel. So look at their huge GPU market share. They have a 63% PC GPU market share. So I am curious. So if it weren't for the government buying a stake in Intel, this you would not want to touch this stock. But it really does make it interesting now that the government owns a stake in this. SoftBank took a stake. I think like they bought 2 or 3% of all the Intel shares. So anyway, I am curious to see what'll happen. So let's see. ARRY. What is this one? What is up, OC Pet? He said Array Technologies. So a $1.4 billion company. Looks like they were up 8% on Friday, but if we zoom out, the stock has been struggling. Let's see what they do. So Array Legacy Operations. Hey, that's up 57% year over year, but comparing to a pit. So, but what, I don't even know how to pronounce that. It's like Spanish or something. Well, let's see. Where does the revenue come from? So 70% from US, 15% Brazil. Let's see. So revenue, this is good. Revenue's up 41, but that's after falling 50% from the previous year. So yeah, dang, look at that. It used to be 500 mil a quarter. They did make net income this quarter, so we want to see them keep that up. They did make net income this quarter. That's probably why they've really rallied so much on this since earnings days, because that really is great news for the company to see the growth come back. I think a lot of investors thought the growth wouldn't come back. Still, nothing's really blowing me away there, but they're decent. They're decent. Quite scary when kids play Roblox, electronics fly. Roblox is making kids breaking iPads. Yeah, there's also some safety issues stuff. So let's see. Cole said cake stock. Yeah. Has anyone heard of the Cheesecake Factory? Well, they're actually publicly traded. Did y'all know that? So here it is. Ticker symbol cake, and the stock's actually been doing pretty good. We zoom out on this company. Yeah, they're at the same prices they were kind of in their peak back in 2021, but they're pretty much at an all-time high right now. You get a nice yield as well. You look at their dividend yield right here, you get a 1.72% dividend yield. The payout ratio is only at 35%, so they actually have room to raise their dividend. But yeah, the Cheesecake Factory is 71% of all the sales, and they own North Italia. Haven't heard of that before. But anyway, yeah, look at this net income. This is the good news. They're making a couple doesn't hurt, like 50 mil in net income a quarter, 40 to 50 mil in net income a quarter. That is good. Sales are up 5%, but at least it's growing. Restaurants are really struggling right now. Some restaurants are doing really good. Like if you look at ticker symbol EAT, EAT, look at this one. They've been a pretty monster performer. This is Chili's, pretty boring stock, Chili's. That's 90% of the revenue. This one's doing great. Here's one that's been doing really bad. CBRL, Cracker Barrel stock, CBRL. Yeah, RIP Cracker Barrel stock. So they're only a $1.2 billion company now, and kind of look at them on the monthly. They're the same price as they were back in 2011. Yikes. North Italia is growing a lot. Oh, that's really cool, Cole. So let's look at Adobe stock. Let's see, ADBE. So this is that software name. A lot of software names have been getting hurt. Want to see a super nice value stock, honest, great balance sheet? Yeah, hey, let's look at the honest company after this. Let's do it. So, what up, Applesauce? So yeah, here's Adobe right here. I'm on an Adobe product nearly every day. Adobe literally made the PDF system. So if you like PDFs, you can thank Adobe because they invented that. And they made it open source. So they don't make any money for PDFs. They just made it open source. Anyone can, use a PDF format. But anyway, I'm on Photoshop, After Effects nearly every day. And basically, the reason the stock has been hurt so much is because the thesis is really hurting here. Like, we might not need Photoshop in 10 years from now. For right now, this is an absolute value steal of a company, but it's the future uncertainty that is the reason the stock's been getting hit. Like, people used to make used to make logos in Photoshop, but now I just had a friend, he made this incredible logo in ChatGPT. Like it just AI generated it. But anyway, Adobe is huge on buybacks right now. Check this out. They're making 1.7 bill of net income a quarter, pretty much. And they're just literally spending all that money since they don't pay a dividend buying back their own shares. So look at this. Their net income is up by 7.5, but the net income per share is up by 12.9. That's because they bought back so much of the company just in the past year. So they're taking advantage of this low stock price and buying back the stock like crazy. So let's see here. I wanted to look at HNST. So this is a very small company. So let's see. Want to see a nice value stock. Great balance sheet. Just turned profitable. So yeah, you're right. So this company just kind of sells a commodity. Literally, most of the revenue comes from diapers and wipes. And this is a very small one. This is a $450 million market cap. And here's what I think investors aren't too happy with about the Honest Company is the fact that they're just really not growing. I mean, so the sales are up by 0.44. I mean, that doesn't even beat inflation. So we wanted to see a little bit more sales growth. I think investors were a little disappointed, but investors were happy because of this net income number. They made 4 mil of net income. You know, when you're only a $400 million company, making 4 million a quarter is really good. So we want to see them keep up that net income positivity. I think analysts are expecting that too. Well, they're expected to lose net income last quarter or next quarter, but look at that. They always beat on expectations. So maybe they'll make net income next quarter. Who knows? But I do just want to see the growth kind of come back. The sales are only at 0.4. I think if I zoom out here, I should show me where their revenue comes from. Yeah, 100% of their revenue comes from the US. Dang, if it won't pull up, then oh well. Oh, well, great. Failed to load. So let's see. All right, it's just not going to work then. All right, we're not looking at it. So let's see. What's this one? ITRI. But yeah, I forgot to mention another thing about the Honest Company. They have 70 million of cash and no debt. So the Honest Company as well takes a lot of risk off their table. They have 70 million of cash and no debt. So here's ITRI. This is a $5.8 billion company. Let's see. They're pretty close to an all-time high. Well, yeah, what up, Ab Does Life? How's it going? So this one, pretty close to an all-time high. Let's see what they do. So networked solutions, device solutions. Let's see. How's the network solutions doing? Well, that business is down by 1% year over year. So yeah, this is one thing I would be a little concerned with. The revenue did go negative. So can you do Flugo Guide? I don't know what that is, Jimmy. If you give me if you guys got a stock you want to look at, give me the ticker symbol. But this is good news. So the revenue did fall, but the net income grew by 30. That's really impressive margin expansion. So yeah, look at that. They're making 50 to 80 million of net income every quarter. So the net income's up 30, even though the sales are down by 0.5%. That's net margin growth. They have real pricing power. Cash from operations is incredible as well. Wow. Are they doing share buybacks? Let's see. Net income. Oops. Net income's up by 32. EPS is up by 30. So you own about 1% more of the company than a year ago. Did Jerome Powell say how big of a rate cut? Probably like 50 basis points. I don't know. Thanks for looking at a good buy zone. Yeah, it's a really cheap play. You know, how does Reddit make money? Mainly from advertisements. They're also licensing out like their like data to like LLMs. That's one weird, really good growth driver for Reddit. They're like selling their data to Google, for example. So someone said Snowflake right here. This is actually a Palantir competitor. So this company does exactly what Snowflake does, exactly what Palantir does, but there's some bad news about this company. Here's the good news though. I'll show you the good news and bad news. The good news is they're extremely growthy. I mean, look at this annual revenue. It literally just hits a new record every year, every quarter. So the sales are amazing, but if you're wondering why the stock has been struggling, it's because of these losses. They have so much stock-based comp, it's really hurting them. The losses are worsening too. They lost 35% more than the previous year, even though the sales grew by 30. So they're losing 300 to 400 million of net income a quarter. This is very not sustainable. I mean, they really need to start trending in the better direction. So that's one reason I think Snowflake's been struggling, but I do like the growth there and the industry. So let's see, FL, hopefully this isn't a micro cap. We don't really like to cover the very small companies. FLUO. So I type in FLUO. I can't find that company actually. Maybe they're not on my exchange. I do apologize if I can't find that one for you. What app are you using to analyze these stocks? Yeah, hey, Four Eyes. This is a brokerage right here. It's where you buy stocks and stuff. If you want to get this app, it's in the link tree in my bio, the very first link there. It's my favorite brokerage to analyze stocks and stuff. Lowest fee. It's also an affiliate link too, so if you sign up and deposit $100, we'll both give 5 free stocks. Or you can just type it into Google. It's just a brokerage called Moomoo. So yeah. Roblox under investigation. Yeah. What up, Steve? He said BILT. What up? Let's do BILT. So this is an ETF, and then we'll look at ONDS. What up, Dylan? So here is the BILT. This is the iShares Infrastructure Active ETF. So this is an ETF. So we want to go see what stocks that it owns. And these are some stocks I've never heard of before. Look at that. TCL. NextEra Energy, Union Pacific. Yeah, these are some good infrastructure plays. AEP, Williams, huge natural gas company, Southern Company, probably my second or third favorite utility out there. Look at this stock right here. On Georgia Power and Light, this stock is at an all-time high, and even though they're at an all-time high, you still get a sustainable 3% plus dividend. If you're looking for a high yielding play, 3% yield, Southern Company is a great one that's sustainable. But anyway, yeah, BILT, that's an interesting one. So let's see here. ONDS, what's this one? So Ondas Holdings. Look at that rally recently. Yo, up 19% on Friday. There must have been some good news. So let's see here. Ondas Automotive Systems. So it looks like they're an autonomous car driving thing. Look at the analyst expectations of revenue. Expected to just grow, expected to double to 10 mil, and they're beating on expectations. So maybe they'll be even more growthy than that. So yeah, revenue's up crazy. They're barely losing any money, like 9-10 mil a quarter. That's nothing. That's great. I thought the losses would be worse. They just fortified their balance sheet, probably from issuing shares, but look at how the liabilities just dropped and the assets just grew. So that asset to liability ratio, that 25%, the equity, you just own a lot more of the company. I can see why this one's doing so good recently. I don't know if I'd buy them right here though, but interesting little small cap there. So yeah, we can look at BABA. Yeah, y'all want to look at Alibaba? Let's do it. So this is a Chinese company, by the way. This is like known as like the Chinese Amazon. They're more business to business though than business to consumer, because a lot of drop shippers will buy a bunch of stuff on AliExpress and then sell it themselves to consumers. But anyway, look at this right here. You know, they're printing money. I mean, if you average it out here, they're making roughly 4 billion of net income every quarter. And on that, if you just hold shares of this, you now get a dividend too. They're rewarding the shareholders as well, near 1% yield. The PE is a 16. They are Chinese, but that's probably why the multiple's low. But it's a pretty good value stock, you know, e-commerce play for China. To be honest, if I had to pick Amazon or Alibaba, I'd rather pick Amazon, and I do own Amazon, but they're not bad. They're not bad. So, here's a great aerospace and defense company. And actually, what's this one? There's a penny stock called WSBN. I'll check it out for you. So, hey, by the way, we don't really. Oh, wait, WSBN. Yeah, hey, not sure if you covered them. We actually can't view that one, so they must be an OTC. So, unfortunately, I can't even view that stock. I was going to check it out for you. Oh well. So let's look at GE Aerospace. This is a great aerospace and defense company. They're in an industry, these commercial engine repair industry, where it's so federally regulated. It's like so capital intensive. They're never going to have any competition. So their main business, best business, commercial engine and servicing, it grew 30% year over year. But that's not the best part. The real best part about this company is the margin expansion. Oh yeah, then they're in the defense propulsion tech. But look at this right here. Here's the best part about GE Aerospace. So look, the revenue is up 21. That's really good growth first off. So the revenue, sales are up 21, but the profits, the net income is up by 59. So they're having pricing power. They're having margin expansion. You basically have 20% net margins now. Margins are up 32%. Incredible. This one deserves to be at an all-time high. Plus they're doing share buybacks. They're doing dividends. I regret selling them. Dang it. Perfect. Probably another great buy and hold forever kind of stock. Fubo, please. Yeah, what up, Applesauce? So really, Fubo is just in the hands of Disney now. You know, Disney owns 80% of the voting rights. You know, I've read articles like Disney could just make this company not exist anymore. It's literally just in the hands of Disney. And, you know, if they go back to like this, the upside isn't much. The upside is just basically back up to $6, but it's a double. So the max return is basically a double on this company. They're not going over the Disney valuation. So to be honest with you, I'm not seeing much value here. You know, you could probably make a good 20% or something, but it's tough. And here's the other thing. The business is no longer growing. So the business, Fubo, is now negative growth. The sales are down 3%. If it weren't for Disney buying this company, basically, this stock would be a zero or like way lower. And the only reason they made this net income was from the basically gift, the money they received from Disney. So anyway, my side of the bet here is just Disney shares, and I do own Disney. Check that out. It's my second largest holding. I got 15 shares of Disney. Boo. Disney is like great, man. They're innovating on the ESPN service. ESPN would carry. Oh yeah, they got MLB rights. MLB TV would be incorporated in ESPN. ESPN is owned by Disney. They also have a huge partnership with the NFL. They own Hulu, the streaming services, the parks. Disney's pretty cool. I don't expect Disney to really outperform in the long run, though. But yeah, it's tough with Fubo just for that reason. What is this one? SE stock. Is that C? So yeah, this is C right here. Super growthy, I believe, e-commerce company. Um, I can't wait to show you the financials of the stock right here. I mean, they deserve to be doing this good. Check this out. So, here's a cool stat. We get active users. So quarterly active users are 664 million, up 22 million from the previous year. What does this stand for? Quarterly GMV. Unfortunately, I should know what GMV stands for, but I don't. Anyway, but yeah, wondering where this company's revenue come from? 71% e-commerce. Then they're in digital finance services as well. Look at the finance business here. Incredible growth. It's up 69% from the previous year. And the main e-commerce business is up 33, also to a new record. So both segments of business are growing like crazy over here. One thing you do got to be aware of, this isn't an American company. So look, 70% of the revenue is Southeast Asia and then Latin America. So it's like an international e-commerce kind of Amazon play. But look, they're extremely growthy. And I love we judge them from their financials. The financials are incredible. Revenue's up 38. Net income's up 400%. What's the margins? The margins grew by 275%, but yeah, 8% net margin on this company. E-commerce, yeah. Tencent's the largest shareholder. Dude, Tencent just owns everything. They own Snapchat, Reddit, so many other companies. So yeah, let's see here. Neo, you know what? To be honest with you, this is not a great company. It's just a tough buy. Here's why, in my opinion. So if you look at the top right, the market cap, I'll kind of keep it simple here. The whole company is worth $14 billion. So kind of remember that number. The whole company of Neo is worth $14 billion. Here's the bad news and why I just can't trust this one. They're burning money. They lost $1 billion this quarter, $1 billion last quarter, 800 mil that quarter, 700 mil. So, and it's not really headed in a better direction either. So they're just burning through money, and look at that's doing to their balance sheet. So you used to have more assets and liabilities. These net income losses got to come from somewhere on top of issuing debt and diluting you as a shareholder by issuing shares while the stock's at all-time low. The liabilities are now the same as the assets. Again, they've had some momentum recently, but I just have a scary feeling this one's just going to go back to all-time lows. They have bankruptcy risk, like losing that kind of money. I just don't like companies burning through that kind of net income. Let's see. I'm thinking how to buy option and what strategy to use. I like covered calls. What stocks are you looking at buying? Right now, Dylan, there's not much, with the market being so green. One stock I have been, buying, I recommend if you want to buy a stock, you should DCA, dollar cost average. I've been dollar cost averaging into Coca-Cola Consolidated. It's the bottling company like crazy. Here's a stock I bought at all-time highs. I bought another share of Amphenol Group. That's a really good one. Amazon, I want to see Amazon come a little lower, but I bought another share of Amazon at 214. And here's some stocks I've kind of been buying, some cheaper companies that are actually at a decent valuation, like Progressive Corp. Actually, if y'all don't mind, I want to go over this stock real quick. And it's basically on my cost basis, so you can get in at the exact same price as me on Progressive Corp. And this is a stock, if you don't have any exposure to insurance, this is, in my opinion, like one of the best, if not the best insurance stock out there in the whole stock market. Check this out right here. So 81% of the revenue comes from their personal lines of business. If you could look on an annual basis, it just hits a new record every single year. So it's at a new record for the full year 2020. Same with the commercial lines. That's up to a new record as well. Investment income also at a new record. But here's the best part. Honestly, man, look at this. Revenue is up 21. First off, 22 billion of revenue this quarter. Look how consistent these growth rates are. It just goes 20% every year. But revenue is up 22. And net income, the profits are up to 100%. The margin expansion here is ridiculous. 15% net margin, highest net margin ever on Progressive. They made $3.2 billion of net income this quarter. And what are they doing with all this money? They're returning it to the shareholder via special dividends. So normally they just pay you 10 cents of dividends a quarter. Well, every January, they're now doing this special dividend. In January, they paid you $4.50 as a special dividend. They didn't need to. They just did it to reward shareholders when they normally only pay you 10 cents a quarter. The exact same time last December, it was 75 cents. Went from 75 cents to $4.50. They're also doing share buybacks. Progressive Corp is just a great insurance stock to own for the long run. And the valuation's really cheap on that one. So kind of like a value play. Check this out. If you look at the PE, which is, again, price to net income, they're trading at 14 times net income. Again, the industry average is a 13, but they deserve a little premium to the industry. They are a winner. So I do like Progressive. So let's keep going here. CoreWeave, I'll be really quick about CoreWeave. Again, that's a stock owned by Nvidia. If we go back to the Nvidia portfolio right here, 85% of Nvidia's portfolio is just in CoreWeave, and they've kind of been puking since its peak of 180. I think they just acquired CoreZ, which is like a Bitcoin mining company. But the good news here is how growthy they've been. I mean, look at this. The revenue went from 400 mil to 1.2 bill. If it weren't for this, I mean, I wouldn't even look at this one, but they're so growthy. So revenue's up 200% or 3x. Bad news, they're losing a couple hundred mil a quarter. So we do want to see the losses start to narrow. I wonder if there was any specific news here. CoreWeave, oh, look at that. The CDO, the Chief Directing Officer, McBee, acquired 600,000 shares. CoreWeave Chief Services Officer sells 300,000 shares. Anyway, CoreWeave, that's an Nvidia play, proxy kind of. I like the growth there, but I'd be careful with the net income losses. And they just kind of IPO'd. So, all right, let's see here. What about Tedra? Hey, what's the ticker symbol for that stock right here? Qubits, QBTS. So here's a quantum play. You know, if I wanted quantum, I don't think I'd pick this is a pure quantum momentum company right here. So they're a $5.3 billion company. You know, I just can't pay $5.3 billion for a company that there's so many better companies with half the market cap. Like there are companies out there with a $2.5 billion market cap with significantly better fundamentals. Like, but this is all just momentum right now. You know, they lost 167 mil of net income. If you're wondering what happened to their balance sheet, how did their balance sheet just get like this? They did the right thing. They themselves are like, yo, our stock price should not be up here at $15. Let's dilute the life out of the shareholder by a couple hundred million. Well, they diluted the shareholder by $400 million in the past quarter, which is great news. It fortified their balance sheet, basically removed any chance of bankruptcy. So yeah, here's it. Look at that cash pile. Bro, they have 820 mil of cash now with no debt and a 5 point. So 20% of the market cap is just cash, but it's just momentum right now. I'd be careful with that one. So let's see the trade desk. Let's see. Oh yeah, the TTD. This is that TV advertising company. They've been seeing a lot of increased competition from Amazon, the Amazon Roku partnership. So they also just lost Netflix. So Netflix used to use the trade desk to find advertisers because Netflix has a new advertising tier subscription. They were using trade desk to find ads. Well, Netflix just cut them out. Netflix just does it themselves now. So they lost Netflix as a partner and they kind of lost their margins. So they have a high PE. And so what I'm trying to say here is I have a scary gut feeling that this one's probably going to go lower. Maybe 10% lower or something. So I don't know if I'd buy the dip right now at $53, but the PE is a 64. So they're trading at 64 times net income and they gave bad guidance. But look at this. Revenue's up by 18, but net income is only up by 6. So what that means is, yeah, the margins fell by 10% year over year. So margins dipped by 10%. They're losing some core customers. They have a very high valuation. But still, it's still a great company. They're great advertising stock. They're making over basically 100 mil of net income a quarter, just about. They're investing for the future. Nice. So no bankruptcy risk here, but I think it just still, even after the dip, they're still a little bit pricey even after it. I feel like small chance they could keep on going lower. But after they go lower, I'd look into them because they're still a great company. So Sebastian said Oscar Health. Yeah, here's Oscar right here. This is that Medicare, Medicaid stock right here. That's still profitless, but they've been stealing market share from like UNH, and they've kind of just been caught up in the whole UNH regulation shenanigans where government doesn't want these Medicare, Medicaid providers making as much profit. But look at how growthy Oscar Health is. This is the thing I love. I mean, look at this. In 2020, for the full year of 2020, the revenue was 590 mil. Now for the full year of 2024, the revenue was 9.2 billion. That is a major increase. They did miss on revenue, net income, and so they did miss on expectations in the most recent quarter. But so I love them for the revenue growth, but they're still struggling with net income positivity. I mean, they made 200 mil, but then they lost 200 mil. So kind of just a growthy name. So let's see here. They're still in a tough industry as well. All right, so what up, Lino? I got Eli Lilly on the drop following the pull results, so that was nice. Yeah, Vahid, that was a great little buy there. Nice, yeah. Is UNH still a buy? Since we're looking at Oscar Health, we can look at UNH too. So on Warren Buffett just bought the dip on this company. So if you're wondering why did this stock just gap up right here, Warren Buffett bought the stock at $330 a share, and it's under that today. So he bought it around this time, and it was only disclosed that he bought it on this day right here. So basically, that's why the stock went up. I would be careful with this one. I wouldn't buy this one over 300. I'd wait till under $300 to buy this because there is still a lot of future uncertainty. Like that's why the multiple has collapsed. That's why they're trading at a 13 PE when they're normally at a 25 PE. And here's why. The net income is expected to collapse. I mean, look at this. The net income per share is only expected to be $1.70. It's normally $5 to $6, even more, and it's only expected to be $1.70. That won't even be able to afford the dividend. The dividend cost $2.21 of EPS a quarter. So anyway, the net income is expected to fall another 50%. You get a nice yield though. You get a 2.7% dividend. We're a customer. They're still growing. We're an OptumRx customer. The OptumRx business grew 19% year over year to a new record. I mean, look at that incredible little gap up. In 2020, revenue was $35 billion. Now it's $133 billion. Maybe that's why the government's not too happy. But anyway, I think under $300, that one looks interesting. What happens is, hey, I'm on a brokerage right here, by the way, BRG. If you want to get this little software, I'm on this brokerage. It's in the link tree in my bio. It's that very first link there. It's an affiliate link too. So if you sign up and deposit $100, we'll both get 5 free stocks. Yeah, or you can just type it into Google. It's just a brokerage called Moomoo. But here's a really cool one, AppLovin. Yeah, and then we can look at Nvidia earnings. Yeah, Nvidia reports earnings next week. That's what all eyes will be on. But here's a very, very, very impressive growth company that deserves to be doing this good. They deserve to basically be at this new all-time high, 52-week high level. Check this out right here. If we look at the sales, this is crazy. The revenue is up 77%. So revenue's up by 77%. But net income profits are up by 164. Look at that. What are the margins? 65% net margin. I don't believe the growth of this margin is 65. Dude, that's actually ridiculous. What's the gross margin here? Basically 90% gross margin, same as Reddit. Look at this free cash flow number. That's what FCF stands for. Up 70%. Net income's up 164. So that explains why this stock is doing so good. And that's why they've basically been a multi-bagger since 2019. It's because of how good and growthy their financials are. I see why they're doing so good. They deserve it. Yeah, hey, Benji, I'm on a brokerage again. If you want to get this little app I'm on, it's in the link tree in my bio, the very first link there, Benji. So yeah. So what was it? Oh yeah, Nvidia. I wanted to pull up Nvidia right here. Yo, what up, Van? How's it going, man? Hey, if you want the best way to support me, by the way, just hit the follow button, hit the subscribe button, hit the like button. Yeah, watch out for people impersonating me. I sell nothing. I have no course, book. I'll never DM you, follow you. Watch out for people impersonating me. This is my only account. Only other account I do have is a YouTube channel called Nathan Robert. My YouTube channel is also in the link tree in my bio. I'm streaming on there as well. So if you missed anything, you can replay it on the YouTube stream or just watch it from there. So anyway, here's NVIDIA. Let's go and analyze NVIDIA right here. So first off, obviously we know they sell GPUs. They have a huge market share. Look at this, a 20% PC GPU market share. And yeah, you're right, Blue Moon. NVIDIA reports earnings next week. So that'll be very interesting. They have this automotive business as well, where they have this autonomous driving software that now Lucid uses. So Lucid cars, their autonomous driving cars, are using NVIDIA's software to power that. And they're also a huge data center play. Look at how the data center business went from $22 billion to $39 billion. Data centers need GPUs, and well, NVIDIA makes their own GPUs. So that's why it's genius for NVIDIA to get into this industry. But also look at this net income. The bottom line here is ridiculous. I mean, what other companies pretty much making $20 billion of net income a quarter? And look at these growth rates. At this growth rate, what's it going to be this time next year? So the heavy CapEx of the Mag 7 from like Meta, Amazon, Microsoft, Google, these heavy CapEx numbers are just being flooded into NVIDIA. Look at free cash flow numbers up 80% year over year. So anyway, NVIDIA is a great one. NVIDIA is so big as well that they, of course, own some individual companies like we were just looking at. NVIDIA owns CoreWeave, they own ARM, APLD, Nebius, or they own a portion of those stocks, I should say. Anyway, let's see here. SEZL, yo, Hakan, this is one of my favorite fintech stocks of all time. Yo, what up, Carrie? Just hit it. Nice. BlackRock. Yeah, let's look at BlackRock stock too after this. That's BLK stock. So, hey, thanks again, Carrie, for the likes. So here is Sezzle stock right here, SEZL. This company has incredible growth and incredible margins. And not financial advice, I just put this one on your watch list. I wouldn't buy this one yet, but I put it on your watch list. Look at how growthy they are. This is the best part. The revenue is up by 76% year over year. So 98 million of revenue. And out of that 98 mil of revenue, 27 million of that was net income. They had a one-time adjustment the same time last year. So if you go to the net margin, it says 53%. This was that one-time adjustment I'm talking about, but ignore that it's down 57%. This is an incredible margin quarter. 30% net margins. I mean, yeah, you really want to go to operating profits. Yeah, look at that. That's how you tell this was a one-time adjustment, because the operating profit's up 116% year over year, and it's much lower. But anyway, they're just so growthy, growing their net margins, deleveraging their balance sheet like crazy as well. So here's what I mean by that. If we go to their balance sheet right here, look at the asset to liability ratio from a year ago. The liabilities used to be 76% of the assets. Now it's only 62% of the assets while growing. So anyway, Sezzle is a great fintech stock with good financials. So here's BlackRock stock, BLK. This one has been very interesting. So BlackRock is taking in a bunch of fees from their alternative business. So if anyone's heard of the iShares Bitcoin ETF, the iShares iShares Ethereum ETF, that's been given BlackRock a lot of growth in their alternatives business. So if we go to where does BlackRock get all their revenue from, they're an asset manager. Look at their alternatives revenue. This has been one main growth driver. This is from their crypto products, basically the IBIT ETF. Oops, is it going to load here? Sorry, my Wi-Fi is kind of bad right now. Yeah, look, it's up 71% year over year. Incredible growth. It used to be just like 300, 400 mil a quarter. Now it's doubled. So pretty good. And you get a nice yield, a 2% dividend yield on BlackRock. What up? Yeah, hey, thanks. Hey, so this is a brokerage right here where you buy stocks and stuff. If you want to get this little app I'm on, it's in the link tree in my bio. It's the very first link there. It's an affiliate link too. So if you sign up, we'll both get 5 free stocks, full transparency. Or you can just type it into Google, just a brokerage called Moomoo. Link tree in bio, first link. Let's see. Yeah, it's my favorite app to do analysis and stuff on. Favorite brokerage, lowest fee, best analysis, best free tools. So Moses said, Ulta Beauty, let's do it. ULTA Beauty. So this company right here, they're in the beauty and cosmetics industry. They've actually been doing pretty decent. When we compare this to like an Elf Beauty or an Estee Lauder, Ulta Beauty is actually doing very well. So let's see. Revenue's up by 4.5. And the net income's down a bit. So first off, they're making a bunch of net income every quarter. This is great. 250 to 400 million of net income every quarter. But the margins are falling a bit because the net income did fall year over year. But notice this, the net income is down by 2.5, but the net income per share is up by 3%. So how is that possible? How is the net income down, but net income per share positive? It's because the share part of the ratio went down. So Ulta Beauty has been buying back their own stock like crazy. And I literally mean crazy. You own legit 7% more of the stock than you did a year ago. So impressive. Hey, what up, Aiden? He said FICO stock. Yeah, FICO. This is the score business. Has anyone's heard of like the FICO score? Basically, whenever you go make a big ticket purchase, like you buy a car, a house, you're paying a couple of dollars for like your score, and like $4 or $5 for your FICO score. And they've had immense pricing power, because who cares if you're buying $1 million house? Who cares if you're paying $5 or $8 for a little score? So they just had immense pricing power. The score business just hits a new record every year. They're making a lot of money. Look at this. Net income's up 43%. They're growing their margins as well. So revenue's up by 20%. But net income's up by 40%. So more net margin expansion here, up by 20%. Yeah, great gross margins. Basically, because of the score business, this is like an intangible asset where they collect like basically high margin royalties on. Don't worry about the balance sheet. Even though the liabilities are higher than the assets, it's normal and it's all right. And one thing, if you're wondering why this FICO stock has been struggling, it's because the government is making a new score business. So there's going to be increased competition for FICO, literally just from the government. The government's making their own little score business. Whatever. Yeah, hey, Wisdom, again, yeah, and Mac, this is a brokerage I'm on. If you want to get this app I'm on, again, it's brokerage, link tree in bio, the very first link there. You buy stocks and stuff on here. It's an affiliate link too. So if you go into pause $100, I'll both get 5 free stocks. But yeah, link tree in bio, very first link if you want to get this app I'm on. Sorry, I keep on seeing a few people asking. Or you can just type it into Google. It's just a brokerage called Moomoo. It's also in the link tree in my bio, first link there. It is an affiliate link, full transparency. So here's Netflix stock. Netflix, how's Netflix looking? Netflix is looking great, my friend. This is an incredible company to just buy and hold for the long run. They won the war of streaming wars. So, they beat Hulu and Disney Plus, but I do own Disney Plus. But look at this right here. Here's a really cool stat. We get The same time last year, they had 260 million premium subscribers. Now Netflix has 300 million premium paying subscribers. And look at this cool little stat we get. This is their average monthly revenue per membership. So per one membership, they're making $11.69 a month off that. And they've had incredible pricing power. Look at this growth as well. So revenue's up by 15, great growth. Revenue's up by 15, but profits, net income is up by 45. That's incredible margin expansion, 25% net margin growth. That's why Netflix is doing so good. Squid Games has been doing great. How's the free cash flow looking? Yeah, man, they're making over $2 billion easy of free cash flow every quarter. And the net income was $3 billion. Net income is better than free cash flow. So anyway, Netflix is, the only thing bad about Netflix is the high valuation. They're a bit of a high PE, but they deserve it. So Brian said, can we please look at COHR? What is this one? Coherent. Yeah, I'll check it out. So a $14 billion market cap. Let's see what they do, because I've never heard of this company before. So they're in networking, materials, lasers. How's the networking business doing? Well, hey, look at that. It looks like, wow, it's up 39%. That's great. Let's see what their combined revenue growth is. So revenue's up by 16. Net income, whoa. So this is weird. Net income, it says it was negative 100 million, but they made really 100 million of operating profit. So they're having a bunch of these little one-time gap net income adjustments, making the net income look negative, but they're actually making a lot of pretty much 100 million plus a net income a quarter. So it's not too bad. They're not too bad. I can see why they're doing decent. So Tesla new buying label, Zoom had a great day. Hopefully your investment pays off. Yo, Bogdan, hey, we're still down bad on Zoom. Check this out. So if we look at our losers down here, we are down 45% on Zoom, and that's after this huge green candlestick. So yeah, we bought Zoom. Had to have been like 4 years ago at this point. But yeah, basically we bought Zoom at $150. They're just too cheap to sell. If you're wondering why am I not selling out of Zoom when I was down 50%, it's because they're too cheap to sell. So look at this right here. Kind of remember this number. The whole company is worth $25 billion. So remember that. The whole company of Zoom is worth $25 billion. Well, guess what? This is a debt-free stock with $7.8 billion of cash. So literally 30 to 40% of their entire market cap is their cash on hand. So you're buying a company with 30% of the market cap is cash, and they're printing money. Look at this. They're making a couple hundred mil a quarter. It was up 62%. That's a great quarter. 350 mil. So again, I wouldn't buy this one. They're slow growth. There's no moat here. I mean, everyone competes with them. Microsoft Teams, I mean, they sell a commodity, but it was just too cheap to sell. That's why I didn't sell out of Zoom. But yeah, good to see them have a little bit of a recovery. So let's see. Tesla. So let's look at Tesla. So to be honest with you, if we analyze Tesla the same way we would any other company, if we go judge Tesla, it's a tough buy right now, especially over like 330, 340 bucks. It's like you can't buy it in my opinion. So if we look at the multiple on Tesla trades at 200 times net income. So it's okay to trade at an expensive valuation. Like Tesla trades at 200 times net income as long as you're really high growth. But Tesla just lost all its growth. We can see total vehicles delivered are down 14% year over year. It's really just explained by the whole automotive segment of business, which is 88% of their revenue, is down 12% year over year. So Tesla lost the growth on the automotive business and the energy business. This is the other 12% of the revenue. The energy business is down by 7.5%, and the margins also collapsed here. So again, I get the future growth here is going to be from robo-taxis and robots or whatnot, but for right now, it's just like you can't pay that premium evaluation right now. Look at this. The sales are down by 12, so revenue's down by 12, and they also had a little fudge to their GAAP net income. This technically wasn't real. The net income was actually much lower, like $300 billion lower. So the margins collapsed even more because look, the operating profit was 920 mil, net income was 1.2 bill. The net income was actually a lot lower. It's just tough to buy Tesla, man. It's just too high of a valuation, and the robo-taxis and the robots are supposed to be what their future growth is, but it's just too high of a valuation for me personally. Hey, what up, Jeff Matt? Good to see you, man. Yeah, hope everyone's having a great Saturday. I normally don't stream on Saturdays, but I decided to because I'm bored. Appreciate y'all being here. What appreciate a comparison between NMA Newsmax and PSKY? I don't know what either of these companies really are, so I wish I could give you more value here, but I really can't. Newsmax, I know they just IPO'd. They're in broadcasting. Maybe they just broadcast the news or something. I don't know. So again, they just IPO'd, so there's not that much history we can look at here. It looks like they're losing money every quarter, but revenue's growing double digits. So here's Newsmax. What is this one though? PSKY. I'll check this one out for you. PSKY. Oh, Paramount Skydance. So yeah, Paramount Skydance. This was the merger. They finally approved the merger of Warner Bros. Discoveries or whatever. But yeah, this is another kind of, I guess, kind of news related business. But yeah, TV media, direct to consumer. How's the TV media business doing? So yeah, it's just not a business you really want to own. Like, look, the TV media business is kind of like Comcast, it's just declining. Like a Sirius XM, it's just like a declining business model. But I guess the merger does bring some growth. But yeah, I don't know about either of those companies. Hey, what up, Nicholas? Wait a minute. You think fundamentals matter? Catalysts matter? Yeah, a lot of it's emotion and sentiment. We're seeing that a lot in like a lot of stocks. A lot of these are just a lot of stocks move on just momentum. You're right, Nak. I wasn't saying that. A lot of stocks move with terrible fundamentals. You're right about that. So Nicholas said Joby. Here like this one, for example. This is a startup, but crazy momentum. So this company does not trade off financials really. So here's Joby Aviation right here. Let me double check. I don't want to end up looking stupid. So yeah, this is basically a startup right here. I mean, look at this. 15,000 of revenue. The company's losing. So here's what you're paying for. Business. It did 15,000 of revenue, 50,000 last quarter. They lost 300 mil this quarter, 100 mil last quarter, 250 mil. They're burning through net income. What's the market cap? So $12 billion company with no sales, losing a couple hundred mil a quarter. I think the only reason people like this one is because Toyota owns a bunch of them. 15% of the company is owned by Toyota Motor. But yeah, it's a tough buy, paying that market cap with no sales. So what up, Danny? How's it going? Yeah, sorry, I'm not trying to be so bearish on all these stocks here. By the way, best way to support me, hit the like on the stream here. I really appreciate that. On RY, I don't think I can find this stock, man. RY.TO. If it's a weird ticker symbol like that, Oh, look, Royal Bank of Canada. Yeah, I can't find, unfortunately, I just can't view that one on here. So actually, here's a cool stock that I do own, actually. So someone said ticker symbol YOU. That is Clear Secure. And if anyone's ever been to an airport, wow, they had a great Friday, up 5%. If anyone's ever been to an airport before, has anyone ever seen those like Clear Secure machines? Basically, like they biometric scan you to like get through the airport faster. They've had a lot. Let me go to the AI news here. Oh, it's not on here. Never mind. But there's been a lot of good news. Yeah, Clear expands TSA pre-checkout services. Clear and Tampa General Hospital announced partnership. Anyway, it's just like a security thing. Look at the growth here. This is what the great part about this company. They're growing double digits. Revenue is up 18. Look at this net income. So this technically was a one-time adjustment from this last quarter. So it says the net income's down by 1%. Wasn't actually. Profits are up by 40%. Like from 30 to 40 million. So they're making net income every quarter. You get a 1.3% yield. Really good yield. 1.3% dividend yield. Are they doing share buybacks? Let's see. They did. You own 1.86% more of the company than you did a year ago. So anyway, that's a cool company. Ticker symbol, federally regulated industry. It's no one else can really compete with Clear Secure unless like the government themselves wants to compete. But anyway, yeah. No problem, Nicholas. If you got another stock you want to look at, let me know. Someone said ET. So here's one thing I do want to warn about this stock right here. I say stock. This isn't a stock. It's actually you're buying units, and with most companies, you're buying a share. You're a shareholder. With this, you're actually a partner. This is an MLP, a master limited partnership. So what I'm trying to say is, at the end of the year, this company will send you a K-1 tax form, and a K-1 tax form is notoriously hard to fill out. I accidentally bought one my first year investing. It costed me $300 with an accountant to get that K-1 filled out. It was not fun, but because they're an MLP, they have a 7.5% dividend yield. They're unlike basically any other stock. So yeah, they own a bunch of natural gas, crude oil, pipelines. Revenue's down by 7%. Net income fell by 28%. Still, they're making like 1.5 billion in net income a quarter. But yeah, I just avoid that one because of the complicated tax stuff. You get the K-1 tax form. Um, Lots of insider buying. Oh, okay. Any good short companies come to mind? Zombie companies, for example. Yo, actually, oh, I don't know which one exactly it was, but I have some stocks on my watch list that I literally added for the sole reason because they're really terrible. Oh, I'm not gonna be able to find it. Man, I won't look for it, but uh-oh. There goes the TikTok stream. Wait, what? Why did Clipchamp just open? That's not good. Well, anyway, TikTok just took down the stream. That's all right. Actually, we're coming up on the end of the stream anyway, so I appreciate y'all being here. That's why I appreciate y'all on the YouTube stream because TikTok just took down my stream for literally no reason. Oh well, so I guess I can log into my second account. But anyway, what was I kind of getting on here? Oh yeah, some zombie company. I'm not going to be able to find it without spending a significant amount of time. That's overall just not worth it at that point. There were some like really terrible companies. Oh, like anyone heard of Funko? Oh, I just realized that's on the screen. Has anyone heard of Funko Pop before? Has anyone heard like those collectibles, the Funko Pops? They're publicly traded. They're burning through money. They lost 40 mil this quarter, 30 mil last quarter. So yeah, this is a kind of weird company. They sell like those collectible stuff. They're only a $200 million company. So look at that. The whole companies were 215 mil. They lost 40 mil this quarter and 28 mil the last quarter. So let me get this stream set up. Hold on. And we won't stream for too much longer, probably another 20 minutes. All right, boom. All right, so yeah, looking at seasonality. So yeah, Funko Pop. There's one more stock. Actually, here's a company I would kind of. So let's talk about stocks we should potentially look to buy. This is one on my watch list. This is Duolingo. Has anyone heard of Duolingo before? It's like that boring language learning app software, and they reported incredible numbers. The numbers were incredible. The stock rallied 25%. Then they sold all of it off, basically on news of ChatGPT, OpenAI making a competitor to Duolingo, but it's no big deal. In all honesty, I love subscription model companies, and look at this. The subscription revenue on Duolingo literally just hits a new record every single year, every quarter. Look at these growth rates in the middle, just 40, 50% growth every year, every quarter. And same with the advertising business. Advertising revenue grew by 55%. So both main segments of Duolingo are growing like crazy, and they're growing their margins. So also look at this. I'll be quick about this, but look, revenue's up by 41, net income's up by 83. So that means they're growing their net margins. They now have a 17% net margin. The free cash flow is up by 60%. And they also just completely deleveraged. They now have no debt anymore. Look at this. So if you're wondering what kind of happened here, the assets went down with the liability. So if you're kind of wondering, is my Wi-Fi tweaking? This might not be good. Hopefully we're back. Okay, yo, we're good. Okay, let's go. Okay, sorry, I had to switch Wi-Fis. Okay, so yeah, Duolingo, their assets went down with their liabilities. That you really want to look at the asset to liability ratio and look at this. The liability ratio is now only a 36%. It improved from 65%. So anyway, Duolingo is so cool. The subscription revenue growth is crazy. The advertising revenue growth is crazy. The margin expansion. So that's a cool subscription model play right there. Hey, Skechers stock, yo. What's the ticker symbol for Skechers? I'll check it out. And Richard said SOXS. What's this one right here? The Daily Semiconductor 3X Bear ETF. So here's the thing about these leveraged ETF stocks. So let me just use Tesla, for example. So we'll compare the 3X versus the normal. So like, let's say you put $100 in Tesla and Tesla falls 30%. Well, in the 3X leverage ETF, the 3X leverage ETF falls by 90%. But then let's say right after Tesla falls 30, they then 2X. So now your $100, it fell to 70, but then the 70 2Xs to 280. But in the 3X leverage ETF, it only goes, your $100 turned to 30, now your 30 is only turned back to 9. Anyway, basically, you get wrecked in a downward market in these 3X leverage ETFs right here, because to make back that percent loss is way harder. So that's a short-term trading vehicle. Pretty interesting. But yo, what up, Mac? So let me type in Skechers stock. I do actually own Skechers. Oh no, Skechers just got taken private. So actually, I forget the company, but one company just bought Skechers and took them private. So Skechers used to be publicly traded. You know what? I can probably find it on here. Skechers. Oh, maybe not. I guess it's already fully delisted. Okay, whatever. So anyway, one stock that's kind of similar is Nike, man. Nike, actually, I completely sold out of Nike at $79 a share. And it's pretty much back at where I sold it at. So hey, Nike's had a pretty decent recovery, but Nike, yeah, hey, someone said choppy sound. Yeah, man, my Wi-Fi just like went terrible. So if it doesn't fix in the next couple of minutes, I'm gonna end the stream. But oh yeah, dude, oh my goodness, this is not good. So yeah, hey, drop a like on the stream to help get better Wi-Fi. But yeah, we've been streaming for 2 hours now. So yo, by the way, if y'all want to hit the follow button, we go live every day. We just look at stocks and stuff. But the thing with Nike is the reason why Nike has been struggling. Like if you look at Nike on the weekly, like S&P is at an all-time high. Nike is nowhere near an all-time high. That's because they lost all growth. Like if you look at the revenue here, I mean, this is not great. Revenue's down by 12%. So the total revenue fell by 12. And then here's the worst part. The net income fell by 85. The margins have collapsed at Nike. Plus the tariff news, like so many headwinds like entered them at once. Okay. Man, it's the Wi-Fi. And that's really loud too. Why they gotta beep it like that? Okay, hey, by the way, I apologize for the Wi-Fi. It's terrible, but the net income collapsed here. Here's the thing about Nike though. So look, they made 200 mil of net income this quarter. This is the devastating part. The dividend every single quarter, no matter what, they have to pay 600 million out in dividends to the shareholders. Well, this is the unfortunate part. They couldn't even afford the dividend by half this quarter. So. And that was real. The operating profit was only 300 mil, down by 80%. So luckily, we hope things have bottomed on Nike and the worst is behind them. Like it can't get worse over there at Nike. So yeah. Nathan, oh my goodness, bro. I'm gonna have to end the stream. I apologize. I'm gonna go for just 2 more minutes here, and then if it glitches again, I'm gonna end the stream. Sorry, guys. We'll probably be live later tonight if you want to hit the follow button. But yeah. And hey, for y'all on the YouTube stream, I'd really appreciate if you hit the like button for me. Can you get a chance? Go to Grok and enter one of your portfolios and ask it to rate it. Oh hey, I don't know how to pull up Grok without sacrificing some potential information. So, but that would be interesting. I might do that after the stream. Just for fun. But here is DRMA. Someone said, is this worth it? So, Nicholas, here's the thing. Is this stock worth it? I'm going to say no. So if you look at the top right, this is how much the whole company's worth. Look at how much this whole company's worth. This whole company's only worth $3.7 million. So this stock, so first off, it's a $3.7 million company with no sales. So the whole company's worth $3 million. They have no sales. So that's why it says no data here. They've never sold anything, not a product or a service. They're losing millions a quarter. I can see why they're at all-time lows. I'd be so careful. I wouldn't buy that one. I would just stay away from it. Yo, what up, Larry? How's it going? EL said AMD stock. Yeah, let's look at AMD. So I do own this one, by the way, here. Actually, I'll show you that real quick. They're like my second or third largest holding in here. Yeah, or my largest holding. No, my largest holding is now AMD stock. So this one right here is like a great buy and hold for the long run stock right here. You didn't have to time the bottom on them. Like, look, the bottom was $76, $80. We got in at $125 a share, and we're up a lot. Someone said, wait, is this a new account? Hey, Lulu, my main account, Nathan Robert, TikTok just took down and banned me from 3 days from live streaming on my main account. So this is my one and only second TikTok account. By the way, best way to... Well, the Wi-Fi... Okay, sorry, guys, gotta go. All right, yo, hope you guys have a great rest of your Saturday. Sorry, guys. I mean, I hope you guys have a great rest of your Saturday. If you want to hit the follow button, we'll be live later. Man, that sucks. Sorry, guys. Have a great rest of your Saturday. We'll be live again. Yeah, the kill